Good morning. Good morning. Hello, good morning. Good morning. Yes, yes, absolutely had my breakfast. Just a second, I'll just switch on the. I'll just. So I am audible as well as I'm visible, I guess. Yes. Good morning. Good morning. Good morning. So how is the morning treating you all? Did you actually revise anything at all after you went back yesterday? And yes, to everyone, whoever has asked me about my breakfast, I totally had my breakfast. You know how I am about the breakfast, right? Never skip it. So tell me, did you all revise whatever we had done yesterday? Did you all revise? Yes. Or I like too exhausted and tired to actually think of revising anything at all. Good, no, Dhanush. It is helping people, isn't it? And you were lucky to actually sit through the class, right? Your Josh was on another level altogether. Correct. So today only my pen fell down. Oh, it's working. I wasn't very sure whether it will work or not. So moving on to the session today. So yesterday we had completed till Nemo that quad non-habit. Anything that we had done yesterday, I mean, obviously we've done everything quite in detail, but still, thank you so much, Dhanush. Still, any topic you want me to explain anything? Hello, Purvi. Hello everyone. Good morning. I'm not taking names because so many people are there. So tell me, anything that you want me to explain a little bit in details before I actually start today's class? No? Thank you, Dhanush. Thank you. So we'll just move to the next topic. We'll start with the topic for the day. We do have a lot to cover, but after covering up Indian Contract Act, it is like now rest is like smooth sailing. It will just in the blink of an eye, it will be done like that. So starting with exactly. So starting with the next topic, rules of delivery. When we talk about rules of delivery, there are quite a number of rules. What the Sale of Goods Act says is that, first of all, what is exactly delivery? Okay, what exactly is delivery of the goods? Delivery of the goods means transferring the possession of the goods from the seller to the buyer, right? Now, I already told you that delivery is of three types. So it is not like, if I get the goods as delivery, just by doing anything which will be regarded as delivery, that is also considered as delivery. So it is not mandatory that I have to physically give you the goods to make the delivery happen. Anything which we agree, let's say you say no, you keep the goods there, it's delivery, then that is delivery. You say hand over the goods to this person, then that is delivery. Whatever we agree between ourselves that shall be considered as delivery, that itself is considered as delivery. Now, so delivery, we were using this color only, right? Delivery shall be deemed by doing anything which the parties agree shall be treated as delivery, right? So delivery shall be, actually I have started the topic. I don't want to in between go into another topic. So that's the reason I did not look into her doubt. I will go to her doubt after this topic is okay. By doing anything which the parties agree shall be considered as delivery. Okay. Now, there are two things here. One is part delivery and one is installment delivery. And what's the difference between part and installment delivery? What is the difference between part and installment delivery? Part delivery means, let us say, I had to deliver you some 600 kgs of goods. I stocked up, okay, I stocked up the carrier, but the carrier was small and it couldn't take the whole of the 600. So what I did was, I had two options, either take down the whole of the goods, take a bigger carrier, or I could just send those goods stocked and the rest will follow. I decided to go for the second one. I send the 400 kgs, that rest 200 will follow. This is known as part delivery. When I deliver a part of the goods, it is deemed that the whole of the goods have been delivered. It shall be deemed that the whole of the goods have been delivered. However, if later the rest of the goods are not delivered, then obviously it's a different thing. Otherwise, it's deemed that the whole of the goods have been delivered. What is installment delivery? Installment delivery means we have agreed beforehand that this 600 kgs, let's say, will be sent in 3 installments of 200 each. So, when I send the first installment, it is only the delivery of the first installment. It shall not be deemed to be a delivery of the whole of the goods, right? Now, so delivery of parts shall be deemed to be a delivery of the whole of the goods. Now, it is not the seller's duty to apply, unless the agreement says otherwise. It's not the seller's duty to deliver the goods. It's the buyer's duty to apply for the delivery. That is, the buyer has to ask the seller that please deliver the goods to me, and then the delivery will take place. In fact, the duty to take the delivery lies in the hands of the buyer and not the seller. But yes, if it is agreed that the seller will deliver, then it's a different thing. Otherwise, the duty to deliver lies in the hands of the buyer. Take the delivery lies in the hands of the buyer. So the seller has to keep the goods ready at the buyer's disposal. That means what? The seller's duty is just to keep the goods ready. It is the buyer's duty to come and take the delivery of the goods, right? It is the buyer's duty to come and take the delivery of the goods. If a place is fixed in the contract, the delivery shall be done at that place. But if no place is fixed in the contract act says, ask the promisee to fix a reasonable place. But in Sale of Goods Act, they very specifically had said that if no place for delivery is fixed, goods should be delivered at the place at which they were at the time of sale or at the time of agreement to sell. What it basically means is, we already saw that the duty to deliver the goods lies in the hands of the buyer. It says duty to take the delivery. Seller only has to keep the goods ready at the buyer's disposal. So let's say I'm going to sell this bottle to you, and this was the place the bottle was at when the contract was made, and no place is fixed. I am just going to get this bottle packed and ready here. It is the buyer's duty to come here and take the delivery of the goods, right? It is the buyer's duty to take the delivery of the goods. Sever means to cut off. Then, if the goods are with a third party, only when the third party acknowledges, it's deemed that the goods have been delivered. I asked for 600 kgs. I repeat again, I asked for 600 kgs. I received 400. I asked for 600 kgs. I received 400. Can I reject 400? Yes. Can I accept 400? Yes. I asked for 600 kgs. I got 800. Can I reject 800? Yes. Can I accept 800? Yes. Can I reject 200 and accept 600? Yes. If I accept 800, I have to pay for 800 at the contract price, right? But if the goods are of different description, right? I ask for basmati rice, you mix small short grains also with that. Will I sit and bifurcate the small and the big grains swimming in that? No. I'm definitely going to reject the goods, right? If the goods have been delivered, if the goods have been delivered to the buyer, I'm so sorry, to the carrier, it is deemed that the goods have been delivered to the buyer. Delivery of the goods to the carrier is deemed to be a delivery of the goods to the buyer, right? And finally, some goods, they suffer some deterioration in transit. You will not get exactly the same quantity sent. You will get a little lesser quantity. This generally happens in case of spirits and liquors, right? So you may get a little less quantity than what has been mentioned. So in this case, even if the seller agrees to bear this loss of deterioration, it is actually the buyer's duty to bear this loss of deterioration. I hope it's clear. All the rules are clear. So duty of the buyer to apply for the delivery of the goods. Goods must be delivered at the place. If there is no contract, at the place at which they were at the time of sale or the place at the time of agreement to sell. Obviously, delivery must be made within a reasonable time. If the goods are with a third party, it is deemed that the goods have been delivered only when the third party acknowledges that he is holding the goods for the buyer. That is, he acknowledges that he is going to deliver the goods. Now, asking for the delivery should be made at a reasonable time or reasonable hour. The expenses of putting the goods into a deliverable expenses of putting the goods into a deliverable state shall be borne by the seller, but the cost of delivery shall be borne by the buyer. Now, if the seller delivers goods less than contracted, he may reject or accept. And if he accepts, he will have to, obviously, if I ask for 600, you gave me 400. Will I pay for 600 or 400? Obviously, I'm going to pay for 400, right? Then, if the seller delivers more than the contracted price, I can accept all, reject all. I can accept the required and reject, right? And then, if seller delivers goods mixed with goods of different description, I'm definitely not going to accept. Definitely going to reject the goods. Now, buyer is not bound to accept the installment delivery unless otherwise agreed. And delivery to the carrier is deemed to be a delivery of the goods to the buyer. Installment delivery, see, I tell you, installments of 3 installments of 200 each. Obviously, that has to be agreed between us. Only then it happens, right? Then a deterioration of goods during transit, even if the seller agrees to bear it, it will be the buyer who shall bear it. And obviously, if the goods are not examined beforehand, the buyer shall have a right to examine them before accepting. Chalo. Is it clear, everyone? Now, you had a doubt. You have any doubt in this? You ask me, otherwise I'll just go to that other doubt you had. Nikita, you wanted to me to explain that disposal of goods, right? Reservation of rights to disposal, correct? Now here, the word disposal could mean transfer of property, ownership, or transfer of possession. When the seller keeps in his control, or when the seller keeps under his control the ultimate disposal of the goods to the buyer. When the seller keeps under his control the ultimate disposal of the goods to the buyer, he has reserved the rights of disposal. He has reserved the rights of disposal. So I repeat again, what is reservation of rights to disposal? Disposal means transferring the ownership of the goods or transferring the possession of the goods. For example, delivering the goods to the carrier is deemed to be a delivery of the goods to the buyer. But if the buyer says to the carrier that, seller says to the carrier that even if the goods reach the buyer's destination, don't hand over the goods unless I say. So even though the goods have been delivered to the buyer's destination, still seller is keeping the ultimate control in his hands. So the seller has reserved the rights of disposal. So disposal here means the transfer of ownership or the transfer of possession of the goods. When the seller keeps in his control the ultimate transfer of the possession of the goods, he has reserved the rights of disposal. Is it clear? Nikita, I hope it's clear. Yesterday also I gave that example. Document of title along with bill of exchange. See, document of title, basically whoever has the document is the person who is the owner of the goods. But if the document of title is sent along with a bill of exchange, sending the two documents together implies what? Sending the two documents together implies that if you want to accept the goods, you must accept the document. And if you send the bill of exchange without accepting and keep the document of title, you will not become the owner of the goods. Otherwise, document of title means you are the owner, but here you will not become the owner. So the seller has reserved the rights of disposal. Chalo, the next, now moving on to the last unit of this chapter, unpaid seller. Now, who is an unpaid seller? Unpaid seller who has not received the whole price of the goods. Unpaid seller who has not received the whole price of the goods. So, ma'am, you are saying who has not received the whole price of the goods. That means if he is a partly paid seller, he is an unpaid seller. Yes. Even a partly paid seller is an unpaid seller. Unless you have not received the whole price of the goods, you are an unpaid seller. Now, why have you not received the whole price of the goods? The seller has not paid or the seller is not... Oops, I'm so sorry. Since morning only these glitches are happening. I repeat again, why have you not received the whole price of the goods? Because the buyer has not paid or the buyer is not required to pay. That is, the buyer is required to pay but has not paid, or the buyer is not required to pay. Well, the reason I have not received the whole price of the goods is the buyer is supposed to pay but he did not pay. When the buyer is not supposed to pay, how can I call the seller an unpaid seller? The buyer is not liable to pay. But when the buyer is supposed to pay but he fails to pay, then the seller is an unpaid seller. Now, why the buyer has not paid? Now, there are four situations which could be the reason the buyer has not paid. What are the four situations? There was no credit period. Now, when we say no credit period, okay, when we say no credit period, that means the buyer should have paid immediately, but the buyer did not pay. Second, there was a credit period which has expired. There was a credit period which has expired. Now, I have given you a credit period. So, let's say I have given you a period of 1 month. So, in this 1 month, you're not required to pay. But once the 1 month is over, you're supposed to pay. If the 1 month is over and you don't pay, then I am an unpaid seller. So, no credit period or credit period has expired. Payment was made by negotiable instrument which has been dishonored. What is negotiable instrument? A promissory note, a bill of exchange, or a check. Payment was made by a negotiable instrument which has been dishonored. And the last one, buyer has become insolvent. In any of these cases, if the seller has not received the price of the goods, the seller is an what? Unpaid seller. Right? If any of these reasons the seller has not received the price of the goods, the seller is what? Is an unpaid seller. Now, this unpaid seller will have both rights against the goods and rights against the buyer. This unpaid seller has rights both against the goods and rights against the buyer. Now, when we say rights against the goods, one thing to be remembered here, to be understood here is that rights against the goods are available when ownership is with the buyer, but the physical possession of the goods is not with the buyer. Right? What is to be understood here is that when we talk about rights against the goods, the ownership of the goods has been transferred to the buyer, but the physical possession of the goods is not with the buyer. Once the goods are physically transferred to the buyer, I will have no rights over the goods. For rights over the goods, it is mandatory that the physical goods should be with me. In fact, if I have parted with the goods and the goods have reached the buyer, then even if I get the goods again, I have no rights over the goods at all. Rights over the goods are available only till the point the goods have not reached the buyer. Once the goods reach the buyer, rights against the goods are over. Even if you get the goods again, you have no rights over the goods at all. Now, what are the rights against the goods? The first one is right of lien. The word lien means what? To retain the possession. The term lien means what? To retain the possession. I have the goods. I sold the goods, but I still have the goods. Right? I sold the goods, but I still have the goods, and I become unpaid. And I become unpaid. Why I become unpaid? Any of the four reasons. Why I become unpaid? Any of the four reasons, right? I have sold the goods, but the goods are still in my possession and I become unpaid. Why I become unpaid? Any of the four reasons. What I can do is I can keep the goods with myself and not deliver them to the buyer. What I can do is I can keep the goods with myself and not deliver them to the buyer. This is what rights of lien. So basically, if I put it in very simple words, I have the goods, I will keep the goods. Now, the right of lien comes to an end. Now, what people actually think is end means it's exercised and comes to an end. No, end means it cannot be exercised anymore, right? And what people think is end means it's exercised and comes to an end. No, when I say end means it cannot be exercised anymore. Now, for lien, the essence is the goods have to be with me. For lien, the essence is the goods have to be with me. Now, if I don't have the goods, how can I exercise lien? So, if I have sent the goods to the carrier for delivery to the buyer, lien comes to an end. Then again, for lien, the reason I'm exercising lien is because the buyer has not paid. Now, the buyer comes and pays. Can I stop the goods? No, he's paying. How can I stop the goods? It's his goods after all. So, the goods are sent to the carrier. The buyer tenders the payment. The buyer or his agent lawfully acquire the goods. They get an order from the court or anything that we will take the possession of the goods now. So, lawfully acquire the goods. Or by estoppel or waiver. What is estoppel or waiver? The seller says to the buyer in everyone's presence that whenever you ask for the goods, I'll give the goods, I'll never stop them. So by saying this, he has acknowledged that he will not exercise any lien over the goods, right? Again, waiver. I'm supposed to get the money today. Now, if you don't pay me the money today, from tomorrow I have the rights of lien. Now, you come and say, ma'am, please extend the time. And you know, I'm so generous. I say, okay, jao, bachche ji lo apni zindagi. 1 month extension. Right? 1 month extension. Can I say, for this 1 month, I have given up my rights of lien? Yes, so waiver. Is it clear? Then, the next right. Now, once I have sent the goods to the carrier for delivery to the buyer, the rights of lien comes to an end, but what starts is stoppage in transit, right? The rights, once I send the goods to the carrier, the rights of lien has come to an end, but what starts is stoppage in transit. For stoppage in transit, what is essential is that the goods are in transit. What is essential is goods are in transit. That is, it's neither with the seller nor with the buyer. They are in transit. And second, the reason I have become insolvent is because the buyer has, I'm so sorry. The reason I have become unpaid is because the buyer has become insolvent. So, where lien could be exercised in all the four cases, stoppage can be only in the case of insolvency. Are you getting my point? where lien could be exercised in all the cases, stoppage is only in the case of insolvency. Is it clear to everyone? Too many glitches today morning. So I have sent the goods to the carrier. The goods are still in carrier and I become unpaid because the buyer is insolvent. I will call the carrier and say, Bhai, stop wherever you are or come back to me. This is stoppage in transit, right? This is stoppage in transit. Okay. Now, when does stoppage come to an end? As I told you, end doesn't mean I have exercised and comes to an end. End means cannot be exercised anymore. The moment the goods reach the buyer, stoppage comes to an end. The moment the goods reach the buyer, stoppage comes to an end. So, stoppage comes to an end the moment the goods reach the buyer. Is this clear to everyone? Yes? Now, after all this also, I have not got my money. The goods are with me, I have not even got my money. What should I do? Oh, money gone, my full bill, kismat gone, karma. As you say, karma is a, that is happening to me. What should I do now? Now, don't cry. Law bolta hai, don't cry, bacha. I'll give you a remedy for that also. Go, resell the goods. Even if you're still not getting your money, what will you do? Sit and wait for that person? No, go sell off the goods. Go and sell off the goods. So the next right is right to resell, right? What is the next right? The next right is right to resell. The unpaid seller may even resell the goods. But tell me, who was the owner of the goods? Tell me, who was the owner of the goods? Who was the owner of the goods? Who was the owner of the goods? Exactly. Buyer is the owner of the goods. Don't you think we should give him a notice that, see, I'm going to sell off your goods? Don't you think we should give him a notice that, see, I'm going to sell off your goods? Exactly. Buyer is the owner. So don't you think we should give him a notice that, see, now I'm going to sell your goods also? Yes. So before resale, we will give a notice to the buyer, right? And wait for a reasonable period of time. If during this period of time, why do we wait? We are just giving one chance to the buyer, right? We are giving one chance to the buyer that, see, if you want your goods, you please pay us the money and take your goods, right? So we give him a notice to the buyer and wait for a reasonable period of time. If during this period of time he pays off the money, he can take off the goods, otherwise we will resell the goods. Now tell me, if on resale, after giving notice, it's not mandatory, no, that the sale will take place at the same price. So if after giving notice we resell and there is a loss on the resale, who will bear this loss? Why have I suffered this loss? Why have I suffered this loss? I have suffered this loss due to the buyer. So who will bear this loss? Buyer. But if there is a profit, I will get to keep the profit. Now, if I resell without giving any notice, whose fault is it? Seller's fault. So if there is any loss, who will bear the loss? Seller. But if there is any profit, since I did not give any notice to the buyer, I am just acting as an agent for the buyer. So if there is any profit, the buyer gets to keep the profit. Is it clear to everyone? Yes? Is it clear to everyone? Yes. Now, if the goods are perishable, do I even give a notice? No, then to ho gaya. Goods will only go swaha. It is deemed that notice was given. In case of perishable goods, it's deemed that the notice was given. Right? Clear all of you? Now, what is the difference between lien and stoppage in transit? In lien, the goods are physically with the seller, but in stoppage, the goods are not with any of the parties, they are in transit. The essence of lien is to retain. I have it, I'll keep it. The essence of stoppage is to regain. I have parted with the goods, I want them back. Right? Lien can be exercised in all the four cases, stoppage only in the case of insolvency, and the end of lien is the starting of stoppage. I hope it's clear to everyone. Now, what are the rights against the buyer? First of all, I have a right to, I have not received my price, and that's the reason I'm an unpaid seller. So my first right is obviously to sue for the price of the goods, right? My first right is obviously to sue for the price of the goods. Now I got the detailed payment, delayed payment. I'm so sorry. So obviously I have a right to sue for interest. Even if the agreement is silent about interest, I still do have a right to sue for interest. Then damages for non-acceptance of goods. I gave you the goods, proper time, proper place, still you refuse to take the goods. I also have a right to sue for damages for non-acceptance. And last, sue for breach. If it is an actual breach, both price and damages. If it is an anticipatory breach, only the right. Now, till now we have only talked about buyer breaching, even obviously seller can also breach. So if the seller breaches, what's the right of the buyer? Even if the seller breaches, what are the rights of the buyer? First, the buyer is ready to take the delivery of the goods. Right? The buyer is ready. He is saying to the seller, please deliver, please deliver, please deliver. Seller is like, yeah, I will. But there is no delivery of the goods. So he has a right to sue for damages for non-delivery of goods. Right? He has a Sagar, the notes will be uploaded. I told you, no, tomorrow the notes will be uploaded on the Telegram channel. So, damages for non-delivery of goods. Then, specific performance. You know, in case the goods have no substitute, like antique goods, I am not going to take damages. I am rather going to sue the other party to perform the contract. So, sue for specific performance. Sue for damages. When do I sue for damages? If there is a breach of warranty, or if there is a breach of condition which has been treated as a breach of warranty. In either of the cases, I have a right to sue for damages. And last, sue for price if there is a breach of condition or I have paid advance money and I did not get my money back. I have a right to sue for price. Is it clear? I hope it's clear. Yes. So the last topic of this chapter, auction sale. Auction sale is not an offer, it's an invitation to offer. The sale is complete on the fall of the hammer. You make the bids, whoever bids is the highest bid, the sale is complete on the fall of the hammer at that bid. Then, if there are, like, lots, like I'm selling two or more goods together, I'm saying auction. Auction is for this remote, this bottle, this is one lot. Then I say the auction is for these two phones and this pen, this is a separate lot. Okay. Then I say auction is for this laptop and my glasses, this is a third lot. Every lot is a separate lot. And for every lot, there will be a separate contract, right? The seller, that is the auctioneer, can he also take part in the auction? Yes. The auctioneer can take part in the auction. But if the auctioneer wants to take part in the auction, he has to specify beforehand that, yes, I want to take part in the auction. Right? If he does not specify, it's fraud. And if it is fraud, the contract is what? Contract is voidable. Then, if the auctioneer, he wants to send someone else to bid on his behalf, he can do that. Same thing, he has to reserve the rights to bid. If the auctioneer appoints more than one bidder, obviously you don't need more than one bidder. So if you have appointed more than one bidder, the only reason could be pretended bidding. And in case of pretended bidding, again it's fraud, the sale is void. Right? The bidder may retract his bid before the fall of the hammer. On the same ground that offer can be revoked before acceptors accepted, a bidder may retract his bid before the fall of the hammer. So complete on the fall of the hammer, goods are put up in lots. Each lot is a separate contract. Bidder may retract his bid before the fall of the hammer. Seller or his agent may bid at the auction if he has reserved the rights to bid. If the seller bids without reserving the rights, it's voidable. If he appoints more than one bidder for pretended bidding, the sale is again voidable. The sale can have a reserve or upset price. That is, below this price, the sale will not take place. So generally, the auction should start at that price, or it is not that the auction should reach that price. So, for example, if let's say that we have set the reserve or upset price as 10,000, the auction stops at 8,000. The auctioneer is not bound to sell the goods at 8,000, right? An agreement between two or more bidder, the sale is complete on the fall of the hammer. That is the hammer part, okay? I'll repeat it. If there is an agreement between two or more bidders that we won't bid against each other. That is, if your bid is highest, I'll not bid against you, and if my bid is highest, you'll not bid against me. This is we are just trying to manipulate the bid, and in this case, the sale is again what? Avoid, because it's against public policy. Lots means when two or more goods are put together for auction. So I say this bottle and this pen, this is one lot. Okay. So when you bid, you are bidding for them together and it's a separate contract. Again, if I say this remote and these two phones are another lot. So this is a second lot. So second lot means it's a separate contract, and a bidding will take place for this lot, and it's a separate contract. So every lot is a separate contract of sale. You cannot say all of them is one single contract. Every lot is a separate contract. Fall of the hammer means falling the hammer. With this, we have completed the Sale of Goods Act. Before I go, I'll just give you 2 minutes. Just go through it before we, move forward to the next one. If you have any doubts, you ask me. Otherwise, we'll go to partnership. Okay. पता नहीं गजब तो कौन ही है. What do we call this? This is called something we call this. Oh, I forgot that word. What do you call that exactly? So should we start with partnership now? Should we start with partnership now? Yes. I just need to find the document of partnership. So that is why I've just, kind of blanked out the screen. I don't know. I need to find it. No, no, this is not Zingard's. No, no, this is not that. But it has a specific word. Hello. I found the Indian. Acha, I have a I have a video which I want to share with you before I start this chapter. Okay. So it is not that great a video, but still I tried my hand at something. So I just want to, show you that. So are you all ready? So, are you all ready for the next chapter? Are you all ready for the next chapter? I don't know whether you will be able to hear it or not. Let's see if you are able to hear it. Let me know. Ramesh, Suresh, and Mahesh decided to start a partnership form of business. They were confused.
Suresh and Mahesh, tell me, can we form a partnership without any agreement? If no, should it be written? No, no agreement is mandatory. However, the agreement need not be written, it can also be implied. Minimum is 2, maximum is 50.
This is a good place for our business. Mahesh, you be the active partner.
You want me to be an active partner. But if I an active partner, I will be liable for everything. I don't want to be liable.
You alone will not be liable for the acts of the firm. Any act done by a partner in the ordinary course of business shall bind the whole firm if done in the usual course. We will also introduce Miss Goodwill. She will not take part in the business but will lend her name to the firm. However, she will also be liable for the acts of the firm.
So tell me, did you actually follow the video? Like, could you actually hear that video? Could you hear whatever they said in that video? Yes, Dhanush, I just made it in the morning only. I wanted it. I don't know you were able to hear it also or not. It was not that great. It was okay, chiller types, but still. So what you understood was that three things we understood from this video. The first thing that we understood was that partnership is formed by an agreement where the minimum is 2 and maximum is what, 50. तो मतलब it is वो बात हो गई I am only गजब है ना, correct or not? Then the second thing that we came to know was that it is not the active partner alone who is liable, but the whole firm is liable for the act of the partner, provided he does the work in the ordinary course of the business, right? है ना? Provided he does the work in the ordinary course of business. And third, nominal partner, okay? A nominal partner, he does not take part in the firm, he only lends his name, but still he is liable for the acts of the firm, right? Anyway, this was just a basic introduction, just giving you a little bit of idea about it. So, should we move to the chapter? Should we start with the chapter now? Yes? Okay. So, now, without any discrepancies and without any disturbances, let's start with the chapter now. So, the Indian Partnership Act 1932 came into force on the 1st of October 1932, right? So, before that, we did not have any act on partnership. No, it was actually a part of the Indian Contract Act. On 1st October 1932, it became a separate act. Applies to the obviously whole of India. Now, what is partnership? Partnership is an agreement. That means if I look at this, partnership can never arise out of status. There should be an agreement, right? Partnership can never arise out of status. There should be an agreement. Now, when we say agreement, agreement can be express or implied, right? Agreement can be express or implied, and if it is express, it can be by words, oral or written. And if it is written, the deed where we mention all the clauses of partnership is known as the partnership deed, right? Right? Now, now it's an agreement, so obviously it cannot be just me. So it is between two or more persons. However, minimum is two, but maximum not given under the Partnership Act, given under the Companies Act cannot be more than 50. And if it is more than 50, it becomes an illegal association. Right? It becomes an illegal association. Now, what is this agreement for? What is this agreement for? This agreement is to share the profits of the business, right? What is this agreement for? This agreement is to share the profits of the business. Now, when we say share the profits of the business, how do we share the profits of the business? As per the agreed ratio, and if nothing is agreed, yes, it means actions. And if nothing is agreed, then in that case, equally. Now we are only saying profits. Ma'am, loss hoga hi nahi. We won't have loss. No, we will have loss, but why should we talk about loss? So ma'am, profit, if there is profit, there is loss. Yeah. And if you share the profit, you obviously bear the loss. Right? How do you bear the loss? The loss will be bared as per the agreed ratio. And if nothing is agreed, it will be shared in the profit sharing ratio, right? Are you getting two voices, like two twice? Are you able to hear my voice twice? I think there could be a glitch on your end, so you can just go and re-log in. That might help you. Now, what do I mean by business? What do I mean by business? Business means it's a trading activity with an intention to generate profit. It is any trade, profession, or occupation, but it has to be recurring in nature, right? It has to be recurring in nature. It should be continuous or recurring in nature. And the most important part, who will carry on the business? The business is carried on by all of them together, or any one or more acting for all of them, right? Everyone is getting two times the voice. Everyone is getting the voice two times. Everyone is getting the voice twice. Wait, wait. Okay, first of all, tell me, can you hear me now? Is this okay now, or is it the same? Am I audible now? And is it still the same? Is it still the same? I mean, that sound, can you hear that sound now? There's something with the setting. Okay, so moving on to our next part. Just change the settings. Now tell me, let's say A, B, C are partners of a firm. Okay, A, B, C are partners of a firm. A is carrying on the business. So first of all, we call A the active partner, right? Now, when he carries the business, he acquires a twofold character. He is the he is the principal as well as the agent of the other partners, right? He is the principal as well as the agent of the other partners. Now, Now, let's say this partner A is dealing with T. Okay, the firm rather, I should say, the firm is dealing with T. Now, when firm is dealing with T, as far as T is concerned, he is the principal. He is the firm, so he is the principal. But as far as when he is going to deal with T, as far as his other partners are concerned, for his other partners, he is there. For his other partners, he is what? He is their agent. Right? For his other partners, he is what? He is their agent. So this partner acquires a twofold character. He is both the principal as well as the agent of the other partners. Now, when he carries the business, it's not just he alone who is liable, but the whole firm is liable. On this grounds, we can say that partnership is an extension of the law of agency. Right? Partnership is an extension of the law of agency. Agent does the work, principal is liable, partner does the work, firm is liable. So we can say that partnership is an extension of the law of agency. Correct? Now, what are the different types of partners that we have? Active partner. Active partner, he brings in capital, he takes part in the business, shares profits and losses, known to the outsiders, liable to the outsiders, has to give a notice of his retirement. Sleeping partner, he basically lends the name to the firm, but he does not take. What am I doing? I'm so sorry. Sleeping partner, he does not take part in the business of the firm. Brings in capital, mostly every partner brings in capital. Yes, brings in capital. Takes part in the business. Oh no, I'm a lazy person. Lazy lump only for me. I don't work. So no, he does not take part in the business of the firm. Does he share profits and losses? If you don't give me profit, then why will I come to your firm? Huh? So yes, obviously he shares profits and losses. Is he known to the outsiders? Yes. Is he liable to the outsiders? I created a blunder. Wait, I full on created a blunder here. I repeat again. Sleeping partner, just ignore what I said, delete button for that previous thing. Sleeping partner, he does not take part in the business of the firm, right? So you think, acha, aake he sleeps off. No, he keeps a hawk like watch on you. Just do something wrong and I'm ready to pounce over you. Does he bring in capital? Yes. You will not do business also. You will not bring capital also. So what? I have kept you for aarti utarne ke liye, that I need a partner to do that every day morning. Huh? So he will obviously bring in capital, है ना? Known to the outsider. That was the blunder there. So he will bring in capital, but he does not take part in the business of the firm. Does he share profits and losses? Yes, he shares profits and losses. Is he known to the outsider? No, he is never the face of the firm. He is, behind. So obviously people don't know he's a partner. So, ma'am, when people don't know he's a partner, so he'll also be not liable. No, but he's a part of the firm. And when it comes to liability, the whole firm is liable. Does he have to give a notice of retirement? I don't even know you are a partner. You come or go. How does it make a difference to me? So, no, he does not have to give a notice of retirement. Now, nominal partner, he lends his name to the firm. I hate Mentos. I don't like anything minty. Much minty. So he lends his name to the firm. Why would I lend the name? Miss Goodwill, remember? Obviously, because I have a goodwill with my name. ऐसे थोड़ी ना I'll take anyone's name. Will he bring in capital? Dude, I've bought my name. What more you want? Everything I only should bring, no? Does he take part in the? Oh, please. I have some status to maintain. I don't do all these stupid small work, okay? So he will not take part in the business. Does he share profits and losses? Generally, no. He actually gets a fixed royalty. But because he is lending his name to the firm, people know he is a partner. Because he is lending his name to the firm, people are coming to the firm, so he is liable. Because he is lending his name, people know he is a partner, so he has to give a notice of retirement. I hope it's clear. I hope it's clear. Now, partners in profits only, as the name is only suggesting, they share only the profits, not the losses. But they are liable to the outsiders for the acts of the firm. Right? They are liable to the outsiders. Liability is for every partner. Sub partner. Let's say ABC are partners of a firm. A agrees to share a part of his profit with another person. Now, this person is called the sub partner. Now, tell me, can this D go and sue B and C for his share? No. Can B and C sue him for his liability? No. So basically, sub-partner is actually not the partner of the firm, he's just a partner of the partner. So when a partner agrees to share a part of his share with another, he has no rights or liabilities against the firm. His rights are restricted to the partner's share. Correct? Now, oh my god, Dhanush, that is like, oh my god. Okay. Thank you for all those compliments that you people keep giving me. Too much of what do you say, boosting up is happening here. Now partners by estoppel are holding out. ABC are partners of a firm. A goes to T along with G, who is his general manager. Is G the partner of the firm? No. G is not the partner of the firm, is just the general manager. But A along with G goes to T and says to T, I am a partner of the firm and this is my other partner G. Was G a partner? No. He should have said, hello, hello, what? Who partner? But no, he did not. So as far as G is concerned, can we say he is also a partner? Yes. And if T contracts with the firm, G is also liable. And his liability shall be severe. Severe means he will be held liable for the whole money. On the other hand, ABC are partners of a firm. O is an outsider, no connection with the firm. He goes to T and says, I'm a partner of this firm. Now, as far as T is concerned, O is also a partner. If T contracts with the firm, O will also be liable, and his liability shall be severe. The basic difference is here a partner is representing, whereas here an outsider is representing himself, right? So, when a partner represents another person as a partner to a third party and such person does not deny it, right? Or when an outsider represents himself as a partner to a third party. In both the cases, the person will have severe liability. Right? In both the cases, the person will have severe liability. Now, minor. We already saw in Contract Act, sorry, a minor cannot become a partner of the firm. However, he can, under Section 30, he can be admitted to the benefits of the firm. He can be admitted to the benefits of. Now, when a minor becomes a beneficiary, what are his rights? He can check, inspect, and copy the accounts of the firm, right? He obviously he's a beneficiary, so he'll get his share of benefits. He can sue the other partners for his share. If his share is not provided to him, he can sue the other partners for his share, provided he severs all his connections with the firm. Bole to, all cut off all my ties and just make a tie with my firm. Now, so he will get his share of profits. He can check, inspect, and copy the accounts of the firm, and he can sue the other partners for his share, provided he severs all his connections with the firm. Right? Now, what is the liability of a minor? See, it's minor. A minor can never have unlimited liability. So that is one of the reasons we cannot even make him a partner. Second, partner is agreement, and a minor has no contractual capacity. So a minor is never personally liable. He is only liable for the share in partnership. That means tomorrow, if there is a loss, he will not get his share, and that's it. He doesn't have to get in anything personally. So, what is the liability of the minor? The will not be minor will not be personally liable. The liability is against his share. He will not be personally liable. The liability is against his share. Now, on attaining majority, can he continue to be a beneficiary? No, you either become a partner or you leave the firm. You are no longer a beneficiary. So, within 6 months, from the day he attains majority or the day he comes to know he was a beneficiary, whichever is later. So let's say as a minor he knew he was a beneficiary. So the day he attains majority, within 6 months. He attained majority and after that he comes to know that he was a beneficiary. So the day he comes to know he was a beneficiary, from that day 6 months. He has to, so whichever is later, he has to give a notice of whether he wants to become a partner or not. If he fails to give notice, he will automatically become the partner of the firm. So he has to give a notice of whether he wants to become a partner or not. If he fails to give the notice, he will become the partner. He automatically become the partner. If he becomes a partner either by giving notice or by default, any case. If he becomes a partner either by default or by giving notice, his rights will be the same as it was when he was a beneficiary, and he will be liable from the day he was admitted to the benefit. Right? He is liable from the day he is admitted to the benefits of the firm. Is it clear to everyone? Now, one thing was not given here, so we'll just do that also. The types of partnership. So, what are the different types of partnerships that we have? What are the different types of partnerships that we have? Partnership for a fixed period, then particular partnership, and then partnership at will. So, what is partnership for a fixed period? The name is only telling us it's for a period of time. Who decides that period? Obviously, the partners will decide the period. Whatever period the partners decide, for that period of time, the partners will be continuing the partnership firm. Once the period is over, no Kaushik. Once the period is over, the firm will be dissolved. But if the partners want to continue after that period, they may continue. It becomes a partnership. What is particular partnership? Which is formed for a specific purpose or project. Once the purpose or project is over, the firm will be dissolved. However, if the partner wants, they may continue, and if they continue, it becomes a partnership at will. What do I mean by partnership at will? Will, as long as we want. So that means what? No time is given to determine as to how long the partnership will continue. That means the partnership will continue as long as the partners want. The most unique feature of partnership at will is that any partner can give a what? Written notice and just retire from the firm or dissolve the firm. Without even the consent, they can retire or dissolve. Hope it's clear. Yes. There is also something called general partnership, which is not for any specific purpose, it's just for general business. If a particular partnership or a partnership for a fixed period converts into a partnership at will, the rights and liabilities of the partners will remain the same. That is, whatever was the rights and liabilities earlier, same will be now also. But whatever rules of partnership at will is there, that will apply to partnership. That is, anyone can give a written notice and retire and dissolve at any time. I hope it's clear. With this, we are done with unit 1 of this chapter. Before I move to the next unit, I want you to, I'm giving you 2 minutes. Just go through. If you have any doubts, you ask me, and then we move forward to the next topic. I mean, next unit, sorry. Seems like no doubt, huh? Chalo. So moving on to the next one, next unit. So this unit basically talks about rights and liabilities of the partners, rather, relation of the partners towards each other, how they can hold the firm liable, in what cases liable on. Everything will be discussed. The first thing, rights of a partner. What are the rights of a partner? Every partner has a right to take part in the business of the. Every partner has a right to take part in the business. Ma'am, only active partner does. No, no. If I tell you that this is an active partner, then it's a different thing. Otherwise, every partner has a right to carry the business, right? When I say this is an active partner and only he can take part in the business of the firm, it's a different case. Otherwise, every partner has a right to take part in the business of the firm. Right to be consulted. No partners or no firm can take decisions without consulting the other partners. If it is a day-to-day matter, we need the consent of majority. But if it is a managerial decision, consent of all is needed. Then every partner has a right to check, inspect, and copy the accounts of the firm. However, it should be done bona fide, that is, without an intention to deceive. Does every partner have a right to remuneration? No. I mean, you are doing the work for your own firm. Your firm and you are the same. Do you charge money for doing your own work? No. So, how can you ask for remuneration? But remuneration is payable if it is given in the agreement or if it is the custom, that is the tradition of the firm. Every partner has a right to share profits. Yes, that's the reason we started partnership. But we cannot say that every partner has a right to share exclusive profits because everyone will share profits, then who will bear the loss? But some partners can be exclusive profits, right? But otherwise, every partner has a right to share the profits of the business. Then every partner, interest on capital, no, you have invested your money in a business, the risk. How can you safeguard your risk by getting interest on your capital? Capital is not payable. However, interest on capital is payable in three cases: if there is an agreement, if is the custom, or if there is a statutory provision. That is, law anywhere says that interest on capital should be. Interest on capital is paid out of the profits. So if there is a loss, we won't pay interest on capital. And it is payable up to the day the firm is operating. See, it's payable out of the profits. The day the firm stops operating, the profit stops. If there is no profit, why do we pay interest on capital? Interest on advance, obviously payable, irrespective of agreement says or not. If the agreement says, then it is payable at the rate specified in the agreement. If the agreement does not say anything, it is payable at the rate of 6. You take a loan from someone, can you say, your last loss? Don't take loan. Interest on loan. It's a loan. You have to give me interest. So it's payable irrespective of profit or loss. And it is payable up to the day the loan is not repaid. Right? It is payable up to the day the loan is not repaid. Then, right to be indemnified. Indemnify means to make good or to pay back. The firm was supposed to pay the money a partner pays. Who was supposed to pay firm? Who pays partner? Can you recover it? Yes, recover it from the firm. Right. Now these rights obviously we will do when we come to reconstitution of the firm. I can stop a partner from joining the firm. I have a right to retire with the consent of the others. I have a right not to be expelled. I have a right to get subsequent share of profits after retirement. I also have a right to start the same business as the firm after retirement, and every partner has a right also to dissolve. I hope it's clear. These I'm not going into details because statutory provision means given by law. Because anyway, when we come to dissolution of firm, we will do all these, or partnership will do all of these. Okay? Now, what are the duties of a partner? They should take care. Excuse me. They are bound to carry the business to the common advantage of everyone. They must use their skill to enhance the business. If they have used their skill to enhance the business, they should not ask for remuneration for doing that. Then, if any partner or the legal heirs of any deceased partner, they ask for the accounts of the firm, they should give accounts of the firm. They should not ask for remuneration for doing the work of the firm. They should attend diligently to their duties. If because of their fraud or willful neglect the firm has suffered any loss, they should compensate the firm for that loss. Then if they cannot make secret profits from the firm, and if they earn any secret profits from the firm, they must give a share of this profit to the other partner, right? So bound to carry the business to the common advantage, should be just and faithful to each other, render any partner or his legal heirs any account that they have asked for, then indemnify the firm for loss caused to it due to the fraud of a partner, attend diligently to the duties, not claim remuneration for doing the business, they're liable to contribute equally to the losses. But ma'am, you said agreed ratio or PSR. Equally doesn't mean equal ratio. Equally here implies just like you share profits, you must also bear the losses. Then indemnify the firm for any loss caused due to his willful neglect. Cannot earn any profit from any transactions of the firm or using the connections of the firm or by carrying any competing business of the firm. And if they do, give a share of the profit to the other partner. Right? Now, partnership property, whatever assets we start our business with is known as partnership property. During the course of the business, if we acquire any property, that is partnership property. But if the firm is using the property of any partner, that will not be considered as partnership property, right? If the firm is using any property of the partner, that will not be considered as partnership property. That is the property of the partner. Then goodwill is also a property of the firm subject to a contract between the partners. Is it clear, everyone? Fifth point, every partner is bound to attend diligently to his duties relating to the conduct of the firm's business. So you should do the firm's business, and while doing the firm's business, you should use your common sense or your diligence so that you don't make any errors or you don't make any mistakes, at least which causes the loss to the firm. Yes. Let's take a 5 minutes break, okay? Go and attend nature's call if you want, and we'll continue after 5 minutes. Is that okay with everyone? Okay. Let's take 5 minutes break, and I'll just be back in 5 minutes. You all also go have water, just stretch yourself. More than an hour that we've been 5 minutes. Okay, I guess done. 5 minutes are over. Are you all there? Hello, hello. Now, the first question here. The first question here. Can I earn secret profits from my firm? Can I earn secret profits from my firm? Can I earn secret profits from my firm? No. So it's no. It's not may be allowed if no, you cannot. So you cannot earn any secret profits from the firm. Now, if a partner earns any profit from any transactions of the firm or by using the name of the firm or by using the assets of the firm or from any personal business which is competing with the firm, he has to give a share of the profit to the other. That is, he will have to share the profits from this business or this transaction with the other partners. So, a partner cannot earn any secret profits from any transaction of the firm or by using the name or assets of the firm or by any personal business competing with the firm. And if he does, he will have to give a share of the profit with the other to the other partner. Can the agreement state can the agreement state that a partner cannot carry any personal business other than that of the firm? Can an agreement state that a partner cannot do any business which is competing with that of the firm? Any business other than that of the firm? If something is seriously wrong. Can the agreement say that? That a partner cannot carry any personal business. Can the agreement say that? So the agreement can specify that a partner cannot carry any personal business. Yes, the agreement can specify that a partner cannot carry any personal business. Yes, it can specify. See, you are my active partner. We are giving you remuneration. Now, if you start your personal business, maybe you will pay more attention to the personal business. Loss of interest for us. So, can the agreement provide this? Yes. Yes, agreement can provide this. So when the agreement provides this, it can prohibit a partner from carrying a personal business. Now, human nature, tell them not to do, they will go and do that only. Right? So now this partner carries a business which is not competing with the firm. Even if it is not competing, when the agreement says you cannot carry any personal business and you carry a personal business, this is breach. And because of breach, you have to what? Give damages to the other partner. I hope it's clear. Yes. Now, implied authority of a partner. Implied authority of a partner. We all know, yes, Varun, they can sue him for injunction. That is, we asked you not to do, but you are doing, we stop you from. Now, implied authority of a partner. What is implied authority of a partner? First of all, we already saw that when a partner does the act, it is not the partner who is liable, but the whole firm is liable, right? We already saw that when a partner does the act, it is not the partner who is liable, but the whole firm is liable, right? Now, any partner, if he does any act in the name of the firm, it is not the partner alone who is liable, but the whole firm is liable. But so authority of a partner is to act on behalf of the firm and bind the firm by his act. But the act should be done in the usual course of the business. If the act is not in the usual course, if the act is not in the usual course, the firm is not liable. Right? If the act is not done in the usual course, the firm is not liable. Now, if the act is not done in the usual course, but the other partners ratify it, accept it, right? Other partners ratify it. In that case, the firm will be liable. So basically, three things to be remembered here. First, implied authority of a partner means the authority of a partner to act in the name of the firm and to bind the firm by his acts. This act will bind the firm only if the act is done in the usual course. If the act is not done in the usual course but the other partners ratify it, then again the firm is liable. Right? Now, what is not the implied authority of? He cannot go to the arbitrator. In case of disputes, he can hire a lawyer, but he cannot go to the arbitrator. He cannot open a bank account in his own name on behalf of the firm. It's the firm's account, it should be everyone or the firm. How can you open it in your name? He cannot transfer immovable property on behalf of the firm. So movable he can, but immovable he cannot. He cannot enter into a partnership on behalf of the firm. This is a managerial decision. And this decision that we should enter into a partnership with another person or firm, whatever, it is a decision which has to be taken with the consent of all the partners. He alone has no right to do that, right? Then he cannot admit any liability in any case which is going on. So when a case is going on against the firm, he cannot go and admit liabilities without the authority or consent of the other partner. He does not have the authority to go and do that. Then again, he cannot withdraw any case filed on behalf of the firm. So what is this withdraw any case? A case is going on. Judge Sahab, I take my case back. No, you don't have. The case was filed by the firm. The authority to take back the case also lies with the firm. A partner has no authority to take back the case. He cannot compromise or relinquish. See, giving a normal cash or trade discount is okay. But you are completely compromising or relinquishing that don't pay only, or giving like, pay me only 50% of the debt. You are making such a huge amount of compromise that is not allowed. So, he cannot submit a dispute relating to the business to the arbitrator, cannot open a bank account in his own name, he cannot compromise or relinquish any claim which is, or portion by the firm, he cannot withdraw a suit or proceedings which is filed on behalf of the firm, he cannot admit any liability in any suit or proceedings against the firm, he cannot acquire immovable property on behalf of the firm, he cannot, that is transfer, so this is basically transfer, purchase or sell. He cannot enter into any partnership on behalf of the firm, right? Now, this is not allowed by the act. However, in partnership, there is one unique thing. The act prevails over the act, the agreement prevails. So, by an agreement, any partner can be given authority to do these work. And in that case, if any of this act which is for which an authority is given is done by a partner, the firm will be liable. So what they are saying that this act cannot be done by a partner. But if by an agreement we give the partner an authority to do even these works, then if he does these work, the firm will be liable. That means comes the next point. A partner's authority can be extended or restricted. That means I can give a partner a little more or a little less authority than the others. But extension and how is it done? By an agreement. By an agreement, we can decide, okay, I give you more authority. You can buy immovable property on behalf of the firm. You can sell immovable property on behalf of the firm. But This is done by an express agreement, but this is something which is internal to the partners. We have agreed. How does it affect an outsider? So if an outsider is dealing with the partner and he has knowledge of this extension or restriction, that is, he knows that a partner's authority has been extended or restricted. If he knows about it, he is bound by it. But if he does not know about it, he is not bound by it. So I repeat again, extension or restriction, the implied authority of a partner can be extended or restricted by an express agreement. How does it affect the third party? If the third party knows about it, he will be bound by these restrictions. So tell me, till this point, is it clear to everyone? Before we go to the next one, is this clear to everyone till this point? Yes? Can I move to the next one? So the last topic of this unit, dissolution of partnership. Please understand, when I say dissolution of partnership, firm is not dissolved, partnership is dissolved. Right? कौशिक आपका जोश एक अलग लेवल पे ही जाके है ना? दुनिया का जोश एक तरफ, आपका जोश अलग. So when we say dissolution of partnership, the firm is not dissolved. The firm continues, but the relation of partners have changed, right? The firm continues, but the relation of partners have changed. You can also say there is a change in the PSR of the firm, right? This happens when a partner comes or goes, right? This is happening when a partner joins the firm or leaves the firm. Dissolution of partnership can take place either by admission, retirement, death, insolvency, expulsion, and transfer of share, right? I am finishing within 2 days. Next 2 days, you sit and study everything of law, tenors, everything you do. Yeah. So, admission. What is admission? Admission means when a partner joins the firm. When a new partner joins the firm. Can anyone just say, "Hey, he's my friend. Come, let's join. Let you come. You also join." No, ba. You need consent of others also, right? So he can join with the consent of all, or he can join by an express agreement, right? He can join with the consent of all or by an express agreement. This this highlighter, so it is like a waste. Kalank on the name of highlighter. वैसी वाली हालत है. Color is. So he can join either with the, yeah, I'll see. I will see, don't worry. Consent of all or by an express agreement, right? He can join, a new partner can join the firm either with the consent of all or by an express agreement. Now, when a new partner joins the firm, what shall be his rights and liabilities? Now, see, rights so depends on whatever they agree. Liability, he will be liable from the day he joins the firm. So one thing which is clear is a minor is liable from the day he was admitted to the benefits of the firm. A normal partner joining, he is liable from the day he becomes the partner of the firm, right? Retirement. What is retirement? A partner leaves the firm. Now retirement can happen again with the consent of all, right? Retirement mean it can happen. Sorry. Up see. Kaushik has started singing. Now, if you sing songs, how will I? My attention will go to the song only, no? So retirement happens. Retirement means a partner leaves the firm. Retirement happens either with the consent of all or express agreement or by notice. So it can happen either with the consent of all or by express agreement or in case of a partnership at will by giving a notice. Now, when a partner leaves the firm, what will be his liability? His liability is only up to the date of his retirement, up to the date of his notice of retirement. In case of an active partner, public notice. In case of nominal, so whoever is supposed to give public notice, public notice. Whoever is not supposed to give public notice, notice to the other partner. One thing that I want to tell you here is, and again he goes. One thing that I want to tell you here is that in types of partners, if a partner retires without giving public notice, okay? So, which partner am I talking about? Those partners who are supposed to give public notice. If a partner retires without giving any public notice, that is an active partner, nominal partner, they are supposed to give public notice, but they retire without public notice. He will be liable for the subsequent acts of the firm as a partner by estoppel or holding out. Clear, all of you? He shall be. So, who is supposed, which partners are supposed to give public notice? We are not talking about every partner. We are only talking about those partners who are supposed to give public notice if they retire without giving any public notice, right? If they retire without giving any public notice, then they will be liable for the subsequent acts of the firm as a partner by estoppel or holding out. Okay? Clear, all of you? Yes, they are deemed to be partners. Now, so I repeat again, what is the liability of the retiring partner? The retiring partner shall be liable for the acts of the firm up to the date of his retirement, right? So, the retiring partner shall be liable for the acts of the firm before his retirement, right? What are his rights? What are his rights? First, he will get his share of profits, obviously. Second, if the firm, when he leaves the firm should settle his accounts. So when I say he'll get his share of profits and property, the firm should settle the accounts. If the firm continues its business without settling the accounts, excuse me, if the firm continues its business without settling the account, then he will get subsequent share of profit. Because you are using my share, you will be giving me subsequent share of profits, or my share will be treated as a loan and you will give me interest on loan, right? You will give me interest on loan. Then, if the firm continues its, when a partner leaves the firm, he can start a same business as that of the firm if the agreement does not stop him. So, if the agreement does not say you cannot carry a similar business, he can carry a similar business as that of the firm if the agreement does not stop, right? So, what are the rights of the partner? He will get share of profits, subsequent share if his accounts are not settled. He can carry similar kind of business if there is no agreement to the contrary. Is this clear? Yes. Now, death. So, Asha, first is given insolvency. So, death and insolvency. We'll first go to death. Death, I mean, I don't need notice. I don't need anything basic. He's dead. He's gone. So, in case of death, the moment a partner is dead, he ceases to be the partner of the. We don't need consent. We don't need notice. No public notice. The fact that he is dead is the public notice itself. The who will be liable? He is dead. We don't even say his legal heirs, because if you remember yesterday when I was teaching you succession, I told you the legal heirs do not have personal liability. So when we say liability, his legal heirs don't have personal liability. His legal heirs only have liability up to the estate. So we say estate of the deceased partner shall be liable for the acts of the firm up to his death. Any act done after his death, he is not liable. He is only liable for the acts up to his death. Right? Now, Now, what are the rights of the deceased partner? Obviously, the partner is dead. We won't say he will have those rights, but rather his legal heirs will have those rights. So, what are the rights? Share of profits and property. Accounts are not settled, subsequent share. And instead of taking the share, he may decide to sell it to any existing partner. If you see, it's the same right as that of retirement. The only difference is in retirement it was given to a partner, here it is given to the legal heirs. So, the legal heirs, the estate of the deceased partner shall be liable for the acts of the firm before his death. And rights, not written here, so I'll just add the rights are same as retirement, correct? Same as retirement. I hope it's clear. Now, insolvency. What about insolvency? When my assets are less than my liability, that's a insolvent situation. When a partner, now in case of insolvency, when the court declares you insolvent, you are no longer a partner of, right? So you go to the court and say, I'm insolvent, I'm insolvent. You go to your partner, I'm insolvent, I'm insolvent. Unless the court declares you insolvent, you're not insolvent. So only when the court declares you insolvent, you cease to be a partner of the firm, right? Only when the court declares you insolvent, you cease to be a partner of the firm. Please understand, in case of insolvency, we don't have any rights or liabilities. Liability, so anyway, he's insolvent. Ma'am, right? So he can have no. Hey, Papa, we'll use his share to pay his liability. No, so no rights, no liability. Correct? Expulsion. We throw a partner out of the, right? We throw a partner, but a pyar se throw him out of. Till now, whenever consent was talked about, we talked about consent of all. In all the cases, consent of all was required. But in case of insolvency, majority consent is sufficient. Till now, whenever we talked about consent, consent of all was required, but in case of expulsion, majority consent was sufficient. Then there should be an express agreement. Express agreement, I will expel A. No, how can I say today I'll expel A? Express agreement means that the agreement gives the authority of expulsion. The agreement gives the authority of expulsion. That is, if needed, a partner can be expelled, right? And most important is good faith. In fact, if the expulsion is not in good faith, the expulsion is null and void. In fact, the partner can rejoin the firm as a partner. Now, what is good faith? For good faith, three conditions have to be fulfilled. The partner is expelled in the interest of partnership. That means he has done something which is against the partnership interest and we are expelling him to protect the interest of the partnership, right? So it is in the partnership interest. Second, I just don't hold his collar and throw him out, get lost. No. I serve him a notice that, see, I'm going to throw you out. So he is served with a notice and an opportunity of being heard. That is, we give him an opportunity, a chance to present his case before we expel him. Is it clear to everyone? Is it clear to everyone? Is it clear to everyone? Yes? Then last, transfer of shares. When a partner sells off his interest in partnership or mortgages or pledges his share in partnership to another person, we call it as transfer of shares, right? When a partner sells off his share in partnership to another person or pledges or mortgages his share of partnership to another person, that is, takes a loan against the security of his share in partnership, we call it as transfer of shares. The person to whom, obviously, again, someone else is coming, so we need the consent. So we need the consent of all the partners or express agreement. So either we get the consent of all the partners or there is an agreement which allows that yes, you can transfer your shares. Now when the transfer of shares takes place, this transferee, ironically, he gets no rights. We say rights, but ironically, he gets no rights. He will get a share of profits, but he cannot take part in the business of the firm. He cannot check, inspect, and copy the accounts of the firm. On dissolution, he will get his share of profits, and to determine his share of profits, he is given a statement of affairs as on that day. Right? So basically, both though rights, but you're not giving him any rights at all. So the transferee will get his share of profits, but cannot take part in the business of the firm or cannot check the books of accounts. On dissolution, he will get his share, and to determine his share, he will be given a statement of affairs as on that. Ma'am, liability to no liability is same as the transferor partner. Correct? So with this, we are done with the dissolution of partnership. Before we go to the next topic, I'm giving you 2 minutes. If you have any doubts, you ask me. Otherwise, A is a partner of a firm. He wants a loan from B. He says to B, I'm going to give my share in partnership as a security for the loan. This is what? This is transfer of shares. Or A sells off his share interest in partnership to B. I hope it's clear. I hope it's clear to everyone. Yes, Kaushik, I hope it's clear. So moving on to the next topic now, the last unit of partnership, registration of partnership. Because till yesterday you were my partner. You know the ins and outs, the trade secrets of my business. You can use them and start your own business. Active partner, you know the customers know you. So tomorrow if you go, you will deal with them. Firm क्या करेगा? Correct or not? So registration and dissolution of firm. Registration. Is registration of partnership firm mandatory? No, it's optional. We prepare the registration for if we want to, it's optional but desirable. Now, why we say desirable, we'll come to it. We prepare the deed. This deed is signed by all the partners or agents of the partners. This is filed with the registrar of the state, where the registrar of firms of the state where the office is situated. Right? Now, why do we say why do we say it is, sorry, why do we say it is desirable to register a partnership firm? Why do we say it is desirable to register a partnership firm? Because an unregistered firm faces disabilities. If the firm is an unregistered firm, it faces certain disabilities. Varun, is the voice resolved? Voice issue resolved? So there are certain disabilities that an unregistered firm faces. So just to overcome these disabilities, it is better that the firm be registered. Now, what are the disabilities? An unregistered firm cannot sue a third party. Third party can sue, yes. Third party can sue. but the firm cannot sue a third party. So third party can sue the firm, but the firm cannot sue a third party. Now the firm cannot claim a set off of more than rupees 100. Right? Cannot claim a set off of more than rupees 100. So what do I mean by cannot claim a set off? What exactly is set off? Set off, the picture of set off comes into, what is exactly set off is two people can be both debtors and creditors to each other. So when two people are both debtors and creditors to each other, we don't pay the money. We rather set off the lower amount, and whoever is supposed to pay the remaining, that person pays the balance amount. This is known as set off. Right? Now, if the partnership firm is an unregistered firm, it cannot set off more than rupees 100. So what is set off? Let's say A owes B 1000, B owes A 2500. Is it that first A will pay and then B? No. What we will do is we will set off 1000 and now B will pay A 1500. So this is set off. But if the firm is an unregistered firm, the only or maximum set off that the firm can do is of rupees 100. Clear? Then the partners cannot sue each other. If, let's say, if there is a dispute, the partners can also sue each other. But if the firm is an unregistered firm, even the partners cannot sue each other. But if I want to dissolve the firm and I want to sue you for dissolution of a firm, then it's a different thing. For dissolution of the firm, we can sue. But otherwise, the partners also cannot sue each other. So I repeat again, what are the disqualifications or the disabilities of an unregistered firm? The firm cannot sue a third party. Third party can sue the firm, but the firm cannot sue a third party. The firm cannot claim a set off of more than rupees 100. And the partners cannot sue each other except for the dissolution of the firm. Now, dissolution of firm may take place without the order of the court or with the. So, basically, it is not mandatory that the court will interfere with the dissolution of firm. The court may order the dissolution or may not order. It is not mandatory that the court will interfere with the dissolution of the firm. Now, the court may be dissolved without the order of the court. The firm may be dissolved without the order of the court. That means the partners mutually decide and dissolve the firm. What is this by agreement? There are 10 partners and all the 10 partners agree, let's dissolve the firm. So by an agreement or the consent of all the 10 partners, the firm will be dissolved. Happening of certain contingencies. Firm is formed for a period of time, the period is over. Firm is formed for a particular purpose, the purpose is over. A partner is dead. A partner is insolvent. Except one, all are dead. Except one, all are insolvent. Right? So on these events, the firm may be dissolved. Because of some color issues, the color is coming different. You may not be able to see it. I'm really sorry about that. So term is over. Purpose is over. A partner is dead. Partner is insolvent. Except one, all are dead or insolvent. Can we say this is compulsory, rest all is not compulsory? Can we say this is compulsory? Point number 4, that's compulsory, whereas the others are not compulsory. Correct or not? Now, when will the court order for the dissolution of the firm? When someone applies to the court, who can apply? A partner can apply. Even a third party can apply. So anyone can go and apply to the court that this firm should be dissolved. Now, when someone applies to the court that this firm should be dissolved, then the court will order for the dissolution of the firm. Now, let's understand what are the cases where the court will actually order that this firm should be dissolved. Permanent incapacity of a party. this should be of an active partner. If an active partner is permanently incapacitated, if an active partner is permanently incapacitated, the court may order for the dissolution. Perpetual losses. The firm is undergoing losses. The firm is undergoing losses, no scope of turning it into a profit, right? Then we can, ma'am, why will we go to the court? We can ourselves dissolve. Yes, we can ourselves dissolve. But for dissolving, we need the consent of all the partners, and one of the partner is not agreeing only. So what to do? Consistent breach of contract by a partner. A partner is consistently breaching contracts. We are telling him don't do, but he's non-stop doing that only. Illegal association. Partnership has more than 50 partners. Misconduct of a partner. Business has become illegal. So we have four business, one is illegal. Just close that illegal business. We have one business that is only illegal. We have to close the firm. Except one, all are dead or all are insolvent. Ma'am, it was here also, no? Here, except one, all are dead or all were insolvent. That one partner dissolved the firm. Fine. Here, the partner did not dissolve the firm. He continues. Court बोलेगा रुक जा भाई थाम. Wait. Then with the what order of the court. Is it clear? Now, when the partnership firm is dissolved, what is the order for payment? Obviously, first of all, first thing to remember is that even after dissolution, partners remain liable till public notice is not given. Right? Partners remain liable till public notice is not given. So, on first we decide to dissolve the firm. On 10th we dissolve the firm. That is, we give notice. So the firm will be dissolved on 10th, not 1st. And between this period, if any contract is made by any partner in the name of the firm, the whole firm is liable. Clear? The whole firm is liable. Is it clear? Now, once the firm is dissolved, we obviously have to make the payments now. Once the firm is dissolved, we obviously have to make the payments now. In what order we pay? We first will pay the outside liability. Then we will pay partners advance or loan. Right? We will first pay outside liability. Then we will pay partners advance or loan. Then we will pay capital. And if there is any surplus left after this, it will be distributed amongst the partners in their profit share. Now, please understand the firm's assets must be sufficient to pay up to the capital. The firm's assets must be sufficient to pay up to the capital. If the assets are not able to cover up to the capital, it is a deficit. If it is not capable of paying up to the capital, it is a deficit. And in case of deficit, the partners have to contribute to the deficit. That is, they will bring from their home. They will contribute this deficit in their profit sharing rate. Right? Let us say excess capital is 6,400, wise capital is 600. After paying off outside liabilities, assets available is only 2,000. So I have to pay 7,000 capital, but I only have 2,000 asset. So what is the deficit? 5,000. And this 5,000 deficit shall be borne by X and Y in their profit sharing ratio. Nothing is given, so equal. So both of them have to contribute 2,000. Right? So they will bring in money from their houses. How much? 2,500. Now, so if there is a deficit, the deficit shall be contributed by the partners in their profit sharing ratio. If the partner has both personal and partnership debts, then his personal property shall be first used to pay his personal debts and then his partnership. So if he has both, so when I bring in this 2500 from my personal assets, so let us say this Y has personal assets of 10,000 and he has to bring in 2500. So from this 10,000 he will first pay his personal loans. And after paying his personal debts, if anything is left, that will be used to pay. Right? Is it clear to everyone? Is this clear to everyone? Just give me a minute. Okay, so with this, I guess we are done with Partnership Act also. Yes. So any doubts you have? Well, thank you. Chalo. Now tell me, do you have any doubts or should we move on to the next chapter? Do you have any doubts or should we move on to the next chapter? Yes. This also completes and moving on to the next chapter. There's this one problem with the Companies Act. Please bear up with me. I had written handwritten notes, but while turning into this PDF, this is what happened. We'll just see how well it comes out. If it comes out okay, oh Nikita, the color thing, because I have used this marker, this is horrible, no? Tired saying thank you. That is true. Chalo, I guess I have to use this only. Is this coming, Baba? That is why I did not want you to suffer that much. So taking on. Chalo. Yeah. Now, actually, handwritten notes. This is the problem with this note is that because of my color, there is some problem with the resolution of my system. So because of that, when I use this, you will see that all these documents which I have, used the highlighter will not be visible. That is the problem. Anyway, so let's start with Companies Act. Okay, we'll just try how much we can do it. Let's see. So anyway, company, if I would have known this, I would have actually highlighted only anything. Wow, my notes are only gone. Okay, so moving on to this now. So tell me, company. Okay, so this I can actually mark it here. So this is better in that way. Anyway, I am speaking. I hope you have your notes in front of you. Though these notes I'll send it to you anyway. But I hope you have your notes in front of you. When we say company, what is a company? A company means a company registered under this act or any other previous act, right? Actually, if I use that other one, this note, handwritten notes, I cannot mark here. So that is why I'm using that PDF only. So yeah, so let's change the color of the highlighter. So it means what? A company registered under this act or any other previous act, right? What is very much evident is that registration of a company is mandatory. Registration can be done either under the Companies Act 2013 or if it was registered under the previous act, it's absolutely valid. Then moving on to the characteristics of a company, the whole point is that the moment a company is incorporated, okay, the moment a company is incorporated, a thin wheel called the corporate wheel comes between a company and its member. A thin wheel called the corporate wheel comes between the company and its members, which means the company and members are not the same. Company is not responsible for the member, member is not responsible for the company. Right? Whatever company does, member is not responsible, vice versa. Whatever member does, company is not responsible. So we both are two different entities. We are not liable for each other, right? We are two different entities and we are not liable for each other. Company is not liable, as I said, company is not liable for the members, members are not liable for the company. Now, how, and this is known as separate legal entity. The moment a company is incorporated, a separate person comes into existence. This person has a legal existence of its own. And from this only we derive the other essentials. What? Perpetual succession. Company and members are different. So death of a member does not result in the death of a company. Members may come, members may go, company shall continue. And if you remember the case where the 5 members or 6 members of a private company, all of them were dead, still the company continued its business, right? And in fact, in the words of the judge, even the even a hydrogen bomb cannot kill a company. And then the liability of a member of a company is limited. Since the company is making the contracts, member, why should we be having unlimited liability? We will have limited liability. The act is done by the company. Company should be held responsible. So the liability of a member is what? Limited. So now when the company is making a contract with a third party, if the third party needs to sue, the third party will sue the company. Or if the company needs to sue, the company will sue the third party. How can the company or the third party sue some other person? So company and third party, they can sue each other. They don't need the name of a member to file a case. So how can you sue someone else? How can you sue the member of the company? The company made the contract. Go and sue the company. So the company has a capacity to be sued in its own name, and it also has the capacity to sue others in its name. The property of the company belongs to the company. Though the members are the people who have started the company, it is not the members who manage the company. So the management of the company is separate. A separate body called the BOD together collectively, or simply the directors singularly, are the people who manage the company. Company is not managed by the members. Yes, if a member is appointed as a board of directors, it's a different thing. Again, if a member, then ma'am, what is the point of being a member? It is the member who has a right to appoint the what? It is the member who has a right to appoint the board of directors. The board of directors will be appointed by the members, but it is the board of directors who manage the company, right? Then a company may have a common seal. Earlier, common seal was mandatory, but now it's not mandatory. So if the company has no common seal, then in that case, 2 directors and 1 secretary of the company shall sign the document. I hope this is clear to everyone. Yes. Now, what are the different types of companies that we have? We have on the basis of incorporation, on the basis of liability, on the basis of number of members, on the basis of control, on the basis of management, ownership, and then on the basis of profits, on the basis of availability of capital. So we have all the different types of companies. The first being company limited by shares. The word is limited. So obviously the liability of the member is limited. The liability of the member is limited to the unpaid value of shares held by them. So let's say if I am holding 1000 shares at rupees 10 each and I have paid up rupees 4. What is my future liability? 6. When am I liable to pay this rupees 6? Whenever the company makes a call. This call can be made either during the business of the company, or this call can be made during the winding up. During the business, it is the BOD. During winding up, the official liquidators who make the call. Right? Then, if I have completely paid off my rupees 10, then my liability is what now? 0. I hope it's clear. Then companies limited by guarantee. Guarantee means it's a certain amount. Guarantee means it's a certain amount. I am promising that tomorrow when the company goes into winding up, tomorrow when the company goes into winding up, okay? Tomorrow when the company goes into winding up, this is the amount that I will contribute to the company. So tomorrow when the company goes into winding up, this is the amount that I will contribute to the company, and I will not contribute anything more than this amount. This is limited by guarantee. So this money is given only during winding up. Now, now, when we say guarantee company may be with or it may be without share capital. If it is with share capital, you have a liability to pay the unpaid value as well as the liability to pay the guarantee amount. If it is without share capital, your liability is only to pay the unpaid amount. The guarantee amount. I'm so sorry. Your liability is only to pay the guarantee amount. Then unlimited liability. So once incorporated, a company acquires a limited liability status, but we can still have companies with unlimited liability. The liability of the member is unlimited. But when we say liability is unlimited, the liability is unlimited towards the company and not outsiders. So outsiders cannot sue the members for the liability. They can only sue the company. Company can sue the members or recover the money from the members, but the outsiders cannot directly go and sue the members. And in case of unlimited liability company, the moment you cease to be a member of the company, your liability is over. OPC. These are important. OPC, on the basis of number of members, we can have OPC, private and public. What exactly is a one-person company? Which has only one member, or minimum which has only one member, right? Which has only one member. I repeat again, when we say OPC, OPC means which has only one member. Which has only one member. Now, when we talk about an OPC, okay, when we talk about an OPC, the member or nominee of the OPC must be a natural person, must be an Indian citizen, but it is not mandatory that you should be a resident of India. So he must be a natural person, an Indian citizen, whether resident in India or otherwise. Resident in India means who has stayed in India for 120 days in the immediately preceding financial, right? Can be a member or nominee of an. Now, when we say nominee or member of an OPC, why do I mention the name of a nominee? The name of a nominee is mentioned that tomorrow, if the member is dead or incapacitated, tomorrow, if the member is dead or incapacitated, the nominee shall become the member of the OPC. Obviously, I cannot just put anyone's name. I have to get a written consent of the nominee, and this consent shall be filed with the registrar. Right? The name of the nominee under section 4, the name of the nominee shall be given in the MOA. The member can change the nomination or the nominee may withdraw his nomination. Is it clear to everyone? I hope it's clear to everyone. Now, how many companies can I be a member or nominee? A person can be a member of only one OPC and at the same time a nominee of only one more OPC. So, let's say M, he can be a member of one and at the same time a nominee of one, but only one, right? But only one. Is it clear? Is it clear to everyone? Now, what happens if a person becomes a member of more than one OPC? Obviously, the only reason you can become a member of more than one OPC is because of nomination. The only reason you can become a member of more than one OPC is because of nomination. That's the only way you can become a member of more than one OPC. So if a person becomes a member of more than one OPC, If a person becomes a member of more than one OPC because of nomination, he must within 180 days fulfill the requirement of the act. That is, he must select any one OPC. Clear? Now there are certain restrictions on OPC. A minor, first restriction, minor cannot be a member or a nominee of an OPC. Second, no, it cannot be incorporated or converted to a Section 8 company. The motive of OPC is always profit. So you can neither incorporate an OPC as a Section 8 company nor can you convert an OPC to a Section 8 company. It cannot carry on the NBFC business or invest in the securities of any body corporate. With this, we are done with OPC. Is it clear to everyone? Yes, that penalty is that if you contravene with any of the provisions above, you can have a fine which makes 10 to 10,000 and further fine which makes 10 to 1,000 for every day. Will win the default country, right? Private company. So what exactly is a private company? We cannot say which is not a public company. That goes for a public company's definition. A private company is one which has a minimum paid up capital as may be prescribed. Prescribed means central government can prescribe. As of today, nothing is prescribed. So has a minimum paid up capital and as may be prescribed and by its articles. So the articles of every private company must have these restrictions. Okay. The articles of every private company must have these restrictions. The articles of every private company must have these restrictions. First, restricts the transferability of shares. Can an OPC convert into a private or a public company? Yes. Yes. One more thing when we talk about OPC and private public, we'll do it after we are done with. So, restricts the transferability of shares. You cannot say you cannot transfer the shares, but we can say you can transfer the shares subject to condition, right? Cannot say you cannot transfer your shares, but we can say that you can transfer your shares subject to condition. Then limits the number of members to 200. So a private company is minimum to maximum 200, right? In case of a private company, the minimum number of members is 2, maximum is what? Maximum is 200. Now, while counting these numbers, joint holders will be taken as 1. So let's say 3 people hold shares jointly, right? 3 people hold shares jointly. We don't count them. They are members. All the 3 are members. But for the purpose of reckoning this limit of 200, we count them as 1. And employees and ex-employees. Please understand, not just ex-employees, but those ex-employees who acquired the shares while they were employees and continue to hold them even after the employment ceases. These people shall be what? Right? They will be excluded. And prohibits. It's prohibits. So it is not allowed under any circumstances. Right? Prohibits. So it's not allowed under any circumstances. So prohibits the invitation to the public to subscribe in the securities of the company. Right? Prohibits the invitation to the public to subscribe in the securities of the company. Is it clear to everyone? Now, what is a public company? A public company means a company which is not a private company. That means there is no, those three restrictions of articles are not here. Has a minimum paid up capital as may be prescribed. As of today, nothing is prescribed. And subsidiary, subsidiary of private company is, subsidiary of public company is deemed public company. So let us say X Limited is the holding, Y Private Limited is the subsidiary, subsidiary of X Limited. So Y Private Limited is a deemed public company. That means in its articles it is still a private company. After its name, it will still have the words private, articles will have the restrictions, everything. The Companies Act will apply on it as if it is a public, right? Companies Act will apply on it as if it is public. Is it clear to everyone? Am I going fast? Am I going fast or this is okay? Now, small company. Please understand, small company is a company other than a public company. That means only a private company. That means only a private company is a small company, right? Only a private company is a small company. And see, I've written this here also. A small company and an OPC is a private. Written it here also. A small company and an OPC is a what? Private company. Dhanush, I have Companies Act and LLP to do. So once we are done with that, class will get over. Right? So small company means a company other than a public company. So basically, being a small company is you enjoy privileges. So even if a public company fulfills this condition, it will not enjoy these privileges. That's it. It will never enjoy these privileges, right? A small company means a company other than a public company whose paid up share capital does not exceed 50 lakh. That means it is less than equal to 50 lakh, right? The paid up share capital is less than equal to 50 lakh, or the turnover as per, you say whenever you want break I will give you break, as per PL of the immediately preceding financial year does not exceed 2 crore, right? As of today, these figures have become 2 crores and 20 crores. One very important thing, some of you know 4 crores and 40 crores. Ma'am, it's not 2 crores and 20 crores. Yes, as of today, it's 4 crores and 40 crores. But for your exam, the relevant figure is 2 crores and 20 crores, not 4 crores and 40 crores. Sure, I'll give you break. Let me complete small company. Okay. Though we covered a lot actually. Since morning we have definitely covered a lot. So I'll give you break, don't worry. So however, it has been notified that now the figure is what? 2 crores and 20. 4 crores and 40 crores you will not write in the exam if you get this. But if anyone is writing the exams from May onwards, May 23 onwards, then it will be 4 crores and 40 crores. Okay? However, this clause shall not apply to a holding or a subsidiary company, Section 8 company, or a company governed by special act. That means even if they fulfill these conditions, okay, even if they fulfill these conditions, no problem, it's okay. I understand you people are, sitting here since 11. Hats off, no? So you need a break. I totally understand. So, even if they fulfill these conditions, they will never enjoy the status of a small company. That is, they will never enjoy the privileges of a clear. We'll do one thing. Holding subsidiary, it is like we have, yes, obviously I mean, a lot of discussion is there. So we'll do it later. Okay, we'll do it after the break. We'll take a break in that case. I'll see you in 30 minutes. 2:05 to 10. By 2:05, I should be. Okay. By 2:05. Nikita, this is for that only. Have your lunch and come. Chalo, bye. I'll see you after the break. Hello, are you guys there? Hello, guys. Okay. Okay, so moving on. Hello, hello, hello. Welcome. Oh my God, the light is suddenly. Okay, so what was the last topic that we had done? Dhanush, I did not feel like I had tea. What about you guys? You had? So we had done private and public small company also we had done. So moving on to holding subsidiary. So what is holding company? In fact, still having Dhanush, what did you do for the 35 minutes that I gave you a break? Huh? Okay, okay. Okay, okay, okay. No problem, no problem. Just keep listening. The best thing about of something of being available online is that if tomorrow I want to watch it, I can watch it. Absolutely okay. So holding subsidiary. When I say holding subsidiary, we already know they are relative terms and the words are interrelated. As in, I am your holding if you are my subsidiary, right? As in, I am your holding if you are my subsidiary. And in fact, this is given from the definition itself. Holding in relation to one or more other company means a company of which such other company is a subsidiary, right? Okay. So basically, it tells us what is a holding company, but it does not, it tells us that the words are interrelated, but it really does not tell us what exactly is a holding company. So to understand the holding subsidiary relation, let's go into the definition of subsidiary. Subsidiary definition says, the definition of subsidiary says in relation to one or other such holding company, one or other company is such a company in which the holding controls the composition of the board of directors. If I put it in very simple terms, if I put it in very no Kaushik, I do not have it. If I put it in very simple terms, controls the composition of the board of directors means where one company appoints or removes the majority of the directors of another company. So this company becomes the holding and this becomes the subsidiary, correct? So if there are two companies and one company is appointing or removing the majority of the directors of other company, we can say the company who is appointing or removing is the holding and the other is the subsidiary. Or exercises or controls. Exercises means direct or controls via someone holds more than one half of the, that is more than 50%. So ma'am, can I write in the exam more than 50%? Well, it's not wrong. Technically, it's not wrong. But the technical word used is more than one half. So I would prefer you write more than one half, right? Okay? More than one half of the total voting power, not share capital, voting power. Now, this can be either on its own or together with one or more of its subsidiaries. So, I alone hold more than half of the voting power. I, together with my subsidiary, hold more than half of the voting power. Or I don't hold anything, my subsidiary holds. And because my subsidiary hold, I am holding. Correct? See, I'm not giving too much of examples because you know how, if I start giving examples, it will go on and on and on. If you have any doubt in any of this topic, you can ask me. Okay. So let us say X Limited has 2 lakh equity shares, of which 1 lakh 10,000 are held by Y Limited. Can we say Y Limited is the holding of X? Yes. It is held by 1 lakh, let's say 90,000 is held by Y Limited and 30,000 is held by Z Limited. Z Limited is the what? Subsidiary of Y Limited. Then also it is the holding of X Limited, right? Y Limited is holding nothing at all, but Z Limited is holding 1 lakh 30,000. Who is Z Limited? Holding of Y Limited. Can we say Y Limited is the holding of X? Yes or no? I had done this in a lot of detail in the class. I'm not going into the exam explanation detail, example explanation detail because I've done it in details with you. If you have doubt, you ask me. I'll explain it again. Okay? Provided that should not go beyond the layers as may be prescribed. So it should not go beyond the layers prescribed, and the layers prescribed as of today is 2. So overlapping should not be more than 2 layers. Now, the word company under both these sections includes the word body corporate. So the holding or the subsidiary, any one of it could also be a foreign company, associate company. Now, what is an associate company? If one company has a significant influence over the other, then the company which has a significant influence, I repeat again, if one company has a significant influence over the other, then the company on which we have a significant influence is the associate company. This company you can call the parent or the investing company. Okay? What is significant influence? When you control of at least 20% of the voting power or business decision. I put it in very simple terms. Okay. If it is 20 to 50, it is associate company. If it is more than 50, it is subsidiary company. Kaushik, if you ask me that doubt in regular class, I would take it. You asking me this doubt in revision class? Not done at all. Shares held in fiduciary capacity shall not be considered. So basically, let us say Y Limited has a shareholder S who's a minor. Ma'am, how can a minor be a shareholder? Let us say he got it by way of transmission. That is, his dad was actually the holder, but now his dad is Swaha. and S has got the shares. Can a minor be a shareholder of the company? Yes, but someone has to be appointed as a trustee for these shares. Trustee is X Limited. How much shares holding? 25%. Trustee is X Limited. Now, when D is Swaha, shares will go to S, which will go to the trustee. So, X Limited is holding 25% of the voting power of Y Limited. Is Y Limited the associate? If X Limited would have held the shares in its personal capacity, right? If X Limited would have held the shares in its personal capacity, then it would have been yes. But is X Limited holding it in the personal capacity? No, they are holding it as a trustee. So these shares are held in what? Fiduciary capacity. And if the shares are held in fiduciary capacity, those shares will not be considered. Those shares will not be considered. Shares held in fiduciary capacity shall not be. Now, moving on to the next one, government company. What do I mean by a government company? Which at least 51%. So please remember, holding subsidiary was more than half, right? Holding subs hold. Let me close down everything. Holding subsidiary was more than half, but this is what? At least 51. There is a difference of 0.9%. Don't interchange it, right? At least 51% is held by, of the paid up share capital is held by central government or state government, or both by central and state government. Now, this word paid up share capital shall be read as total voting power if company has issued DVRs, that is differential voting rights. If you remember, I told you generally one share gives you one vote, but let's say 5 shares is equal to one vote, that is different, right? 5 shares is equal to one vote, that is what? Different, correct? Is it clear? What is foreign company? Which is incorporated outside India. Obviously, it's a foreign company, so has to be incorporated outside India. So it's incorporated outside India, but has a place of business in India, right? Has a place of business in India. Now, this place of business in India can be direct or through an agent, and it can be physical or on. Is it clear? Whoever has written hi just now, hello, what am I supposed to call you? AK? Kaushik, coming back to your example that you had asked me, you followed my question wrong, Kaushik. I told you, I did not say you followed my question wrong. I said Y Limited is the holding of Z Limited. Z Limited is the subsidiary of Y Limited. You took the question the other way round. Kaushik, did you understand? I'm sorry I did not read your question properly that time. What you are asking me, that silly doubt which you should not be asking. Correct? I guess now I'm getting under the weather. Under the weather kind of a thing. Is it clear? Now, that is Akshay. Non-profit companies. Okay. So, what is non-profit company? What is non-profit company? Section 8 or non-profit company. They are formed to promote sports, science, arts, religion, charity, commerce, technology, environment. Not all of them, in one or more. Okay. Okay. So these companies are formed to promote sports, science, arts, religion, charity, commerce, technology, environment. And now my pen is okay. Bye bye, Tata. Let's go to yeah. Sports, science, arts, religion, charity. मतलब इतना उसको परेशान कर दिया. He ran away, getting scared of you. These companies are formed to promote sports, science, arts, religion, charity, commerce, technology, environment. Not all of them, any one or more. So moving on to the next part. So these companies, they do not, I said do not may not, they do not. There's no option that if I want, I can. No, they do not distribute dividend. So what do they do with the profits that they earn? They reinvest the profits into the business to promote its object, right? They reinvest the profits into the business to promote its object. Now, to become a Section 8 company, they make an application to the central government to issue a license. Once this license is issued, it becomes a Section 8 company. Once it becomes a Section 8 company, it need not use the word limited or private limited after its name. Not required. Even a firm can be a member of such company. Even a partnership firm can be a member of such company. Now, if this company breaches its objects or acts against public interest or acts fraudulently or does not breaches the conditions subject to which the license is issued, then in that case the central government will revoke the license. And when the license is revoked, any one of the three can happen. It can be ordered to convert into a private or a public company, or it can be ordered to amalgamate with another Section 8 company having similar objects, or it can be ordered to be wound up. But before I pass any orders, I must give the company an opportunity of being heard. Right? I must give the company an opportunity of being heard. Right? Must give the company an opportunity of being heard. And these two, since it's such a grave decision, it can only be in the public interest. Is it clear, everyone? Dormant companies, basically, these companies are dormant or inactive companies. They are formed either for a future project, they are either formed for a future project or to hold any assets or any intellectual property, right? That is, I have been incorporated as a company, but as of now I'm not doing any business. So why am I incorporated? For a future project or to hold any assets? And these companies, they do not, and these companies, they do not have, and these companies, they do not have any significant accounting transactions. They do not have any significant accounting transactions, right? What is significant accounting transactions? Any transactions other than payment. So these four are not significant accounting transactions. If you do any transaction other than this four, that is significant. Any transaction other than payment of fees to the registrar or payment made to fulfill the requirements of this act or any other act, or allotment of shares to fulfill the requirement of the act. Basically, whenever people subscribe to the securities, they have to, sorry, whenever people subscribe to the memorandum, they have to take at least one share. Allotting shares to these are not a significant accounting transaction. Allotting shares to outsiders is significant accounting transaction. Now you are a company, irrespective of whether you do business or not, you must have a registered office. And if I have registered office, obviously I'll have to pay some electricity bills or everything. So any payment for the maintenance of office and records. These four are not significant accounting transactions. Anything other than this four is significant accounting transactions. Now, what is an inactive company which has not been carrying on any business? Or in the past 2 years, it did not have any significant accounting transactions, or after every meeting, I have to file an annual return and financial report. For the past 2 years, it did not file any annual return or financial report. In these cases, it becomes an inactive company. To become an inactive company, I have to apply to the registrar that please give me the status of an inactive company. When the registrar gives me the status of an inactive company, I become inactive or dormant company. If in future I want to convert to an active company, I'll just apply to the registrar again that please convert me to an active company. He will remove my name from dormant company, put it back into active company, and I'll get the status of active company. Nidhi companies, they are basically incorporated to inculcate the habit of savings amongst the members. They pool up the savings, and this money is given as a loan to the members. Then public financial institution, you become a public financial institution if you have been established or constituted by or under any central or state act, right? Or not less than 51% of the paid up share capital is held either by the central government or state government or both. Now we are done with the types of company. This is one of the major important parts of this chapter. Before I go to the next part, I'm giving you 2 minutes. If you have any doubts in any of these topics, you want me to explain anything again, you ask me, I'll do that and then we'll move forward. Yes. Suresh, as far as answers sections are concerned, it is absolutely okay if you don't write sections. If you remember the sections, it's your choice. If you don't write the section, there is no hard and fast rule that -10 for not writing any section like that. So, should we move to the next part? The reason I keep giving you 2 minutes in between the topics is, refresh your. So, can we move to the next topic now? I said Kaushik. They're like they give loans. They are, mutual benefit societies. Now, moving on to incorporation of the company. Now, when we talk about incorporation, the first thing that we come across is the word promoter. And is a promoter and subscriber the same or are they different? Oh, is it Dhanush? But still, if you remember, no, then you write. Otherwise, don't write. Because even after learning, some of us we tend to forget. So tell me, is there any difference between promoter and subscriber? Yes. Promoter is the person who comes up with the idea of incorporating the company, right? Promoter is a person who comes up with the idea of incorporating the company. Whereas when we say subscriber is the person uh, who who are the first members, subscribers to the MOA. They are the first members of the company. Now, who is a promoter? If a person is named in the prospectus or the board's report, okay, if a person is named in the prospectus or the board report as a promoter, he will be considered as a promoter. Or if a person has control over the affairs of the company. Now, how can I have a control over the affairs of the company directly or indirectly? Maybe as a director, shareholder, whatever, you become the promoter. Or as per whose advice the director or the board of directors actually work. So in any of these cases, you will be considered as a promoter. But if you are rendering any services in the professional capacity, then you are not a promoter. So let's say we hire a CA or we hire a lawyer, and in his professional capacity is guiding us, and we are working as per his guidance. Ma'am, we are working as per his guidance. Pakka promoter. Arey nahi re baba, he has been hired as a CA in the capacity of a C or in the capacity of a lawyer. Is not a promoter. Now, Section 3 says that a company may be incorporated by 7 or more persons in the case of a public company, 2 or more persons in case of a private company, and 1 person in case of an OPC. Actually, this document is giving trouble now. In case of an OPC. And this company which is incorporated may be a company limited by shares or a company limited by guarantee or an unlimited liability company, as whatever the case may be. Right? Now, just a second. Now, incorporation of company. SPICE Plus is the document in which we apply for incorporation. We apply for name. We apply for incorporation of the company. It is in this document only that we appoint the directors and we also apply for allotment of din. Right? These are the 4 applications that are given in this document. These are the 4 applications which are given in this document, right? These are the 4 applications which are given in this document. Now, along with SPICE Plus, we have to file some documents. First, MOA, AOA. Okay, I have a video for this. Is it okay if I actually check out the video in a minute and get back to you? Not a minute, 30 seconds maybe. I have to check where the video is. I have a video for the incorporation of company. Just give me a second. I would have forgotten only that I have a video also for this. Let me check, okay? I don't even know if I have it or not. Should have it. Not sure. Actually, I just tried my hands on the video. It's not that great. It is okay. Okay. So I'll just play the video.
Miss CA, will you please
Wait,
help
I'll
me
just
form a company?
restart the video, okay?
Miss CA, will you please help me form a company?
Need to file some documents and declarations. Along with that, you also need to file details of your subscribers and directors. File all these documents with the registrar. If he is satisfied,
I want you to pay attention. All of you, I want you to pay attention to the documents that she is saying, okay?
Miss CA, will you please help me form a company?
need to file some documents and declarations. Along with that, you also need to file details of your subscribers and directors. File all these documents with the registrar. If he is satisfied, he will issue a certificate of incorporation and allot a SIM.
So basically, what is happening here is you need to remember for incorporation, okay? You need to remember three things. So Miss CA very clearly told that you need to file three things, right? So she said that you need to file three things. Now wait just a second. So what are the three things that you have to file? Document, declarations. The sound was mine now. Declaration and details. See, I want your attention here. All of you. Yes, it was me. Yes. See, remember these three things, okay? Along with Spice Plus, I have to file what? First of all, I have to file documents. What document? MOA and AOA. Second, I have to file declaration. Now, who is going to file these declarations? This declaration one, we have two declarations here. First, the declaration shall be filed by advocate, CA, CS or CMA in practice who is engaged with the formation of the company and by any director or manager or secretary. What declaration? That we have fulfilled the requirements of the act for incorporation, right? Second declaration will be filed by every subscriber and director. What declaration? That in the incorporation of any other company, we were not guilty of offense. First. Then second, in the management of any company, we were not guilty of fraud or breach of duty. And third, all information, as per my knowledge, all information given is true and correct. Right? So these are the two declarations that we have to give. Now, details. What details? First, address for correspondence. Details of address for correspondence. Correct? Second, details of the subscribers. What details of subscribers? Name, surname, family name, address, occupation, photo ID, proof. And if the subscriber is a body corporate, SIN. Then details of directors. What details? Same, name, surname, family name, address, occupation, photo ID. And if this, and every director must have a DIN, so DIN. Details of DIN. Then, can my director be a director of other company? Yes. So, details of interest of director in any other firm or body corporate, and his consent to act as director. Right? Still lost in that video. That was gone long back. So if you remember this, we have literally covered everything relating to incorporation. You will file all of this. You will file all of this with the registrar. If the registrar is satisfied that you have fulfilled everything, he will issue a certificate of incorporation and allot a SIN. Did you understand? Yes. So we have to file MOA and AOA. We have to file a declaration by advocate, CS, CS or CMA in practice, and by any director, manager or secretary, what? That requirements of the act has been fulfilled. Then a declaration by every director and subscriber that I was not guilty of offense in the formation or promotion of any company, not guilty of fraud or breach of duty in the management of any company, and all information given is true to my knowledge. Then address for correspondence, particulars of subscribers, particulars of directors, particulars of interest of directors in other firm or body corporate, and consent to act as a director. Once you are done, he will issue a certificate of incorporation and allot a SIN. Is it clear to everyone? The moment you are allotted a SIN and certificate of incorporation, company is registered. On such registration, the subscribers become the members of the company. The company becomes a body corporate which has a separate legal entity and perpetual succession. I have tried to cover it up in as less details as possible. I hope this was clear to everyone. Finished. Done. Did you understand? Now, if the company is incorporated by giving false or incorrect information, okay, if the company is incorporated by giving false or incorrect information, if the company is not yet incorporated, then person who has given the false document and is aware that they are false is liable under section 447. If the company has already been incorporated, then every person who is a promoter or the first director or have given declaration are liable under section 447. And against the company, the tribunal can pass any such orders. What? For the regulation of management, making the liability of the members unlimited, strike off name, winding up of the company, or any other order it deems fit. But before it passes any order, it shall take into consideration the contracts already entered and give the company an opportunity of being heard, right? Giving the company an opportunity of being heard and take into consideration the transactions entered. Now, memorandum and articles of association. What is memorandum? As originally framed and altered from time to time. Articles as originally framed and altered from time to time. That means whatever we have made originally, that is articles. From time to time, if we alter the articles, that is also considered as articles. Section 4 gives us the clauses of memorandum, which is name, object, capital, liability, association, and situation. Name, the name should always end with the words limited or private limited. Obviously, Section 8 company, they don't have any requirement. Registered office, we state the name, we give the name of the state where the office is situated, right? Give the name of the state where the office is situated. Then object, the purpose for which the company has been incorporated, and any matter which is required to further the object is object of the company. Then next is liability. Just a second. Then the next is liability. It shall state what shall be the liability of the member, that is limited, unlimited. Then capital, it shall specify the capital of the company as divided into the number of shares and value per share. Association clause, which tells us the details of the subscribers, and in case of OPC, we have the nomination clause, that is the name of the nominee. Correct? Now, the articles, apart from all the other clauses, will have an entrenchment clause, right? Will also have an entrenchment clause, that is providing additional provision. See, articles can be altered by passing special resolution, but the company may provide that some of the clause of articles can be altered by passing more stringent resolution than special resolution. This is known as an entrenchment clause. This can be put into the articles either at the time of incorporation of the company, or it can be put up as an amendment, right? Document is now actually troubling. It can be put up either at the time of incorporation of the company, or only no. So how can I put this entrenchment clause? I can put it, okay, I have to close this. So this entrenchment clause can be put up in the articles either at the time of incorporation of the company, or it can be put up as an amendment. Now, if it is put up as an amendment, in case of a private company, we need the consent of all. In case of a public company, we need to pass a special resolution for this, for inclusion of this entrenchment clause. So I repeat again, what are the clauses of memorandum? Name, registered office, then object clause, capital, liability, and association clause. In case of a OPC, we also have the nomination clause. Articles tells us basically, MOA tells us what the company can do. Articles tells us how the company will do it. When we talk about articles, articles have an entrenchment clause. That is, they can provide that some specific clauses of the articles will be amended by rules which are more stringent or strict than SR. Special resolution is 75% consent. Minimum 75%. So 75% or more of the consent. They can say that this particular clause will be altered by getting the consent of 90%. This is entrenchment clause. This entrenchment clause can be added in the articles at the time of incorporation, or it can be later put up as an amendment. In case of an amendment, it can be put up if in case of a private company all the members agree. In public, 75% agree. That is by passing a special resolution. Correct? I don't know, Dhanush. I think there was some connection error. I mean, my phone was there is no charge, and I'm looking into your messages to the phone. So I was trying to, connect it. It was getting connected and disconnected again and again. I don't know what happened. I just stopped it. Even this other phone will also die sometime. Now, doctrines. You know how important each of this is, right? Doctrine of ultra wires. I have another video for you all. What is ultra wires? Ultra means beyond, wires means powers, beyond the powers of the company. And it is what? Void. The whole concept was laid down in the case of Ashbury. Yes, Kaushik, everything is fine now. In the case of Ashbury Railway Company versus Ritchie, right? So this company made a contract to give a loan to Ritchie. This company made a contract to give a loan to Ritchie, but the MOA of the company did not allow it. So later it tried to ratify it, right? It tried to ratify it. So in this case, the court held that any contract which is ultra vires is what? It is void ab initio, right? Any contract which is ultra vires is what? It is void ab initio. Now, what are the consequences? What are the consequences of an ultra vires contract? Listen to this video carefully. This video completely, okay, and I mean completely talks about everything relating to ultra wires.
Hello, sir. I am Richie. I want to take a loan from your company.
Hello, Mr. Ritchie. Our company will be pleased to provide you with the loan.
सर ये आपने क्या किया?
Why, Miss Rosie? What happened?
You agreed to give a loan, but our memorandum does not allow us. This is now ultra vires.
Any contract which is ultra vires is void ab initio. The other party cannot even claim damages from the company. Even the whole body of shareholders cannot ratify it. A single shareholder can sue the company for injunction. The directors are personally liable.
But I am an outsider, how do I know what the company can or cannot do?
Under Section 399, any document filed with the registrar is a public document, and every person dealing with the company is deemed to have knowledge about it.
So, tell me, did you understand everything that was explained in the video? The next time I have to work on the speed. They speak too fast. Okay, guys, can you hear me? What happened? Why play again? Did you miss out, Nikita? Okay, I'll play it again. Wait.
Hello, sir. I am Richie. I want to take a loan from your company.
Hello, Mr. Richie.
Hello, sir. I am Richie. I want to take a loan from your company.
Hello, Mr. Richie. Our company will be pleased to provide you with the loan.
सर ये आपने क्या किया?
Why, Miss Rosie? What happened?
You agreed to give a loan, but our memorandum does not allow us. This is now ultra vires.
Any contract which is ultra vires is void ab initio. The other party cannot even claim damages from the company. Even the whole body of shareholders cannot ratify it. A single shareholder can sue the company for injunction. The directors are personally liable.
But I am an outsider, how do I know what the company can or cannot do?
Under Section 399, any document filed with the registrar is a public document, and every person dealing with the company is deemed to have knowledge about it.
So, basically, did you understand what the video was trying to tell you? Did you get the basic idea of what the video was trying to tell you? First of all, what it said was that any contract which is ultra vires, thank you, Kaushik. Any contract which is ultra vires, first, it is void ab initio. Can Richie claim damages from the company? Can Richie claim damages from the company? No, he cannot even claim the damages, right? He cannot even claim the damages. Even the whole body of shareholders cannot ratify. That means what they actually did was Ashbury Railway Company, after giving the loan, they called the shareholders to get their consent. Well, you have already done the act and now you are taking the consent. You are trying to ratify and ultra vires act cannot be ratified. You can see, you can contract and then alter. You cannot do this. No. But you can alter and then contract. This is allowed. This is ratification. And ratification is not allowed. So even the whole body of shareholders cannot ratify it. Right? Now, so if contract is made or funds are used ultra vires, who will be liable? Right? Who will be liable? The directors will be personally liable. If it is ultra vires, the directors, but intra vires, the company, it means the directors can do the act, but only with the consent of the shareholders. Right? For that act, we can ratify it. But if the company is not allowed to do the act, how can we ratify it? If the company is allowed to do the act but with the consent of the shareholders, that act can be ratified. You can do it and then ratify it. But if you are not allowed to do it, how can you ratify it? Did you understand this point? I think, Nikita, this was a doubt that you were having. But ma'am, how will I know what the company can or cannot do? So, well, the constructive notice says that whenever a document is filed with the registrar, that document becomes a public document means it's open for everyone. Anyone from the public can go and check this document. And it is deemed that every person dealing with the company is deemed to have knowledge about it. When you come to me, I will not ask, hey, did you read my MOA? Ayo, if you have come to me, you have read my MOA. If you have not, it's your fault. Right? Now, exactly, Nikita. Now, now, I am supposed to see whether the company can do it or not. How the company is doing is not my concern. If there are some internal rules which have to be followed, it is not my duty to check whether the internal rules have been followed or not. My duty is only to check whether company can do it or not. What are the internal rules or formalities to be followed to do it is not my concern. So, they are not liable for the indoor management. This was held in the case of Royal British Bank versus Doctrine. These two are the names of the cases that you need to remember. But because of this, many people started misusing it. So lawmakers later came up with flowcharts. If you already know that the internal requirement were not fulfilled, can you say, oh, I am ignorant, I am innocent? You are not innocent, you already know. Or if there is negligence on the part of any party, you cannot claim anything. It is negligence. You should have been careful. Or in case of forgery, however innocent you may be, forgery will not give you any right. Right? Then moving on to share capital. What is capital? Capital is rupees divided into shares of fixed amount. The capital that the company raises by the issue of shares, which is divided into shares of fixed amount. Capital can be authorized, issued, subscribed, called up, paid up. See, authorized is 10 crores. This is the total capital that the company can raise by the issue of shares. Divided into 1 crore shares at the rate of rupees 10 per share. Is it mandatory I will issue all of the 1 crore together? No. Of this, let us say I only issued 1,05,000 shares. This becomes my issued capital. Of this, public only took up 1 lakh shares. This is my subscribed capital. It's not necessary I've called the whole 10 rupees. I called up rupees 4. So this rupees 4 is my called up capital. One person holding 100 shares has only paid me 2 rupees, has not paid per 2 rupee per share. So this 2 rupees becomes my calls in arrears. That is, this 200 rupees is my calls in arrears, and out of 4 lakh less 200, whatever is the balance is my paid up capital. Right? What is share? A share is a share in the share capital of the company and includes stock. See, the total capital of the company is divided into shares of fixed amount, and this each of the share that is it is divided in is known as shares. We can have equity shares and preference shares. What is equity which is not preference? So let's understand preference, we'll understand equity. Preference shares are those shares which get preferential rights. That is, they will get dividend before the equity. So they get preference in payment of dividend. They get dividend before the equity. And when the company goes into winding up, after paying off the creditors, we first pay the preference shareholders and then we pay the equity shareholders. Any share which does not get such a preference is known as equity. And with this, we are done with Companies Act. Chalo, any doubt you have? So I'll give you 5 minutes before we start LLP. Okay? Full happy you guys are, huh? I'll give you 5 minutes break before we start with LLP. Okay? Yeah. Just 5 minutes break before we start with LLP. Okay? Sure. I'll explain Royal British Bank versus Turquoise. So what happened in this case was that the company was allowed to issue bonds. But the bonds allowed were up to £200. If the bond value was more than 200, we need the consent of the shareholders. Now the company issued bonds worth 2000, but consent of shareholders was not taken. Right? Consent of shareholders was not taken. One of the person to whom the bond was issued became insolvent and his liquidator claimed money from the company. They refuse to give the money on the grounds that they never took the consent of the share. Now, can this be a reason for the company to not pay the value of the bonds? I, as an outsider, my duty is only to see whether the company has the authority to issue the bonds or not. What internal rules were required was not my concern. And when the company failed to fulfill these internal rules, the third party will not be responsible for that. I hope it's clear. Varun, I hope it's clear. Yes, Upendra, all the important words are not visible. Correct. But when you will get it, everything is visible. Yes, Nikita. Okay. Hello, guys. Hello. Hello. And finally, we are moving to the last. This chapter, though, I've taken so many classes also for all of you on YouTube, on this, on that. है ना? So, are you guys there? Am I audible, guys? Hello. Okay. So actually, there's a problem. This whole chapter, I couldn't finish of this chapter. Two, three topics are left. So rest everything is covered here. But for two, three topics, not covered. Okay. Can I start? So LLP, limited liability partnership, it's a hybrid, right? It's a hybrid. It's a hybrid of, yeah, Companies Act. Sorry, it's a hybrid of company and partner. Right? It's a hybrid of company and partnership. So it has the features of both company and partnership, and with both these features, it's a separate concept. So when we do this chapter, you have seen sometimes the two partnership. Now, here characteristics of LLP. I'm not doing that. Please kindly. Okay? I'm not doing the characteristics of a company though, but sorry, LLP. But you please read those characteristics. Okay. Okay. So obviously it's a partner LLP partnership it is. So it has partners. First to be understood here is that Partnership Act 1932 does not apply. Partnership Act 1932 does not apply to this. Yes, finally. Then we had 10 hours of marathon. We had 10 hours of marathon. I don't even know, Dhanush, you guys would be. After all, you are sitting through it, so you can actually understand it better. Kaushik. So, so Partnership Act 1932 does not apply to LLP. So, it is only governed by whatever is given under the LLP Act 2008. Obviously, it's a partnership firm. It's a partnership, so we have partners here. What's wrong? So, who exactly can be a partner of the LLP? And in, hold on. So, who can be a partner of an LLP? Wow, only 4 hours. Only 4 hours. Okay. Anyway, so who can be partners? Individuals or body corporates can be partner. What is a body corporate? Body corporate means a company, including a foreign company, LLP incorporated outside or in or outside India. However, it does not include a corporation sole, a cooperative society, or any other body corporate which is declared by the government. But the government can never declare a company or an LLP as that it's not a body corporate. That means company and LLP will always be a body corporate. Now, individual is disqualified to become a partner of an LLP if he has been. An individual shall be disqualified to be a partner of an LLP if he has been found to be of an unsound mind by a competent court and a finding is in force. That is, a court which has the authority to declare him unsound has declared him unsound, and the period for which he has been declared to be unsound, that period is still going on. Second, he is an undischarged. He is applied to the court. First, I'll go to that. Applied to the court to be declared. See, in partnership, only when the court declares you insolvent, you are disqualified. Here, the moment you apply to the court to be declared insolvent, you are disqualified. Apply to the court to be declared as an insolvent and is an undischarged insolvent. So basically, what is an undischarged insolvent? Undischarged insolvent means a court has declared you insolvent, but your accounts are not yet settled. That period of time is undischarged insolvent. Okay? Now, what is the minimum and maximum number of partners? Minimum is 2, maximum is unlimited. If at any given point of time the number of members is reduced below 2, if at any point of time the number of members is reduced below 2 and the LLP continues its business for more than 6 months with the reduced number, then the single partner who also had knowledge about this shall be personally liable for the obligations of the LLP during this period. This period means, let us say on this day the number is reduced. Okay. So we have 6 months to bring it back to 2. 6 months over and we continue. So this period, any contract is done, he will be personally liable. Yes, he will be personally liable. Okay. I hope till this point it is clear to everyone. Now, every LLP must have at least 2 designated partners. Now, these at least I said, so can it be more? Yes, it can be more. So, it must have at least 2 designated partners. These designated partners are individuals. Only individuals are designated partners, right? They are individuals of which at least one of them should be a resident of India. What is resident of India? 120 days during the financial year. Now, when we say designated partners, okay, individuals. So, can I have all the partners who are individuals? Yes. So, any 2 of them will be designated partners. Can I have all the partners who are body corporates? Yes. So, any 2 nominee of such body corporate will be designated partners. I can have a combination of both individuals and body corporates as partner. Then in that case, any 2 individuals and nominees can be designated partner. That means both individuals or both nominees, one individual, one nominee can be the designated partners. Before you act as a designated partner, you have to give us your consent that yes, I agree to act as a designated partner. And when you give your consent, within 30 days of appointment, we have to file this consent, okay? Within 30 days of appointment, we have to file this consent with the registrar. Now, who will be designated partner? The incorporation document, it will specify, okay? It will specify that these persons are designated partners. If it specifies that these persons are designated partners, those persons will be considered as designated partners. If it says that on rotation basis, from time to time, okay, we will have every partner as a designated partner. That is, from time to time, every partner will become the designated partner. Then in that case, every partner is a designated partner. To become a designated partner, you must hold a DPIN, Designated Partner Identification Number. Is it clear? See, these all things that I have told you, this, and these things, they are actually amendments, right? These are amendments actually. I hope it's clear to everyone. This was also an amendment. The amendment sheet was already given. Now, what is a small LLP? You remember, small company, paid up capital and turnover. Here we don't have paid up capital because we are not issuing shares. But partners have capital contribution, right? So contribution should not be more than 25 lakh. To become a small LLP, the contribution, here we don't have paid up capital. I'm comparing it with company so that you can remember. In company, we issue shares, we have paid up capital. Here we don't have paid up capital because we don't issue shares. What we have here is capital contribution of a partner. So this contribution should not be more than 25 lakhs. Right? This should not be more than 25 lakhs. And turnover, here we don't have PL account, but we have statement of accounts and solvency. So turnover as per statement of accounts and solvency for the immediately preceding financial year should not exceed 40 lakh. If you fulfill both this condition, you become a small LLP. Obviously, you enjoy privileges. Apart from this, it may happen that they may give us some other requirement that if you fulfill this requirement, you will be a small LLP. In that case, if you fulfill those requirements, you are a small LLP. I hope it's clear. Incorporation of LLP. Is it clear to everyone? I don't know. Their messages are getting delayed. Okay. Now, incorporation. The incorporation process here is almost the same but a little smaller version. Okay. First of all, there has to be an incorporation document. Now, this incorporation document must be signed by at least two persons because minimum partner is there too. So, two or more persons will subscribe to the incorporation document. Just like company, here also we have to give a declaration, a statement. Who will give? Same. Any one of these persons who has who has subscribed to the incorporation document, and and advocate, CA, CS or CMA engaged with the formation of the company. What declaration? That we have fulfilled all the requirements of the acts and rules for the incorporation of the. Along with this incorporation document, we will also state. Now, if you remember, MOA, yes, name, business, object, that is, right? Registered office, and then subscribers details. Same thing here also. Name of the LLP, proposed business of the LLP, address of the LLP, name and address of the persons who are partners, name and address of the designated partners, and any other information required. The registrar will register the documents and within 14 days issue a certificate of incorporation. Right? He will within 14 days issue a certificate of incorporation. This certificate of incorporation will be under the seal and sign of the registrar. and it is the conclusive evidence. In case of a company, it is just an evidence. Here it's a conclusive evidence. No one can question it. If any person gives a false statement or gives a statement which he knows is not true or does not believe it to be true, he shall be punishable with imprisonment up to 2 years and fine not less than 10,000 can extend up to 5 lakh. Now, every LLP must have a registered office, right? Every LLP must have a what? Registered office. All documents, notice, communications, whatever I need to send to the LLP will be sent at this office, will be sent here, right? Then these notices can be sent by post under the certificate of posting or by registered post or any other manner specified. Can I change my office? Yes. Any change has to be filed with the registrar. So may change the office and this change has to be filed with the registrar. If default is made, so they will be liable to 50,000 for every day subject to a maximum of 50. Sorry, 500 for every day subject to a maximum of 50,000. This is an amendment. Okay. I hope it's clear to everyone. No one is messaging only. Now everyone has lost the zeal to study also, huh? Name. Now this name, this sections, all the three relevant sections have undergone a lot of change also. First of all, the name should always end with the word LLP or limited liability partnership as the case. The name should not be undesirable. Like government feels it is undesirable, like using names or words. Your designated partner means those people who will look into the affairs of the company. Otherwise, designate means to give. That is your designated position, something which is given to you. Or it should not be identical or resembling the name of any LLP or company or registered trademark. This has been amended. That it was longer. It was partnership firm or trademark, which is the subject matter of registration that has been used. Now what happens? So this whole thing is an amendment. If the name is identical or resembling, how can it be identical? We will ask the registrar to give us a name which is not identical, no ma'am. But still, to err is human, no? Even I am a human being. I can make errors. I thought it was available, but it is resembling. So if it is, then an application can be made by the LLP or the company or the proprietor of a registered trademark to the central government that see the name is identical. Please ask them to change the name. For LLP or company, they have not given any time period, but the registered trademark proprietor can only make the application within 3 years of incorporation of LLP. The time limit for him is what? 3 years. After 3 years, he cannot make the application. So let us say the company was incorporated on 1st Jan 2019 with a name which resembles the trademark. Okay. So 1st Jan 19. First Jan to within this period he can file an application. After this he cannot file an application. Okay? When the application is made to the central government and if the central government feels is of the opinion that yes the name should be changed, the central government will direct the LLP to change its name. Now whenever the central government directs the LLP to change its name within 3 months the LLP should change its name. Within 15 days of change Within 15 days of change, they should inform the registrar so that he can make the changes in the certificate of incorporation. Within 30 days of change, see, I have written it from here only. Within 30 days, not from the end of the 15 days, 30 days. No, 30 days from change. The LLP shall change the name in its LLP agreement. Correct? If LLP fails to change the name, does not follow the orders of the central government, then the central government shall allot, they will themselves allot a new name and the registrar will change the old name to the new name in the register. Is this clear to everyone? Now, the relation of partners and amongst themselves. Obviously, they will have an agreement, and this agreement will decide their rights and obligations towards each other. So, it will be governed by LLP agreement. Ma'am, if there is no agreement, then what will happen? They will use the provisions as given in the Act. Can I change terms of this agreement? Yes. And whenever I change, it has to be filed with the registry. Any change shall be filed with the registry. Now, if the LLP, if there is any agreement which is made before the incorporation of the LLP between the persons who have subscribed the name to the incorporation document, that means LLP is incorporated here and they have made a contract here. Is it binding on the LLP? If after incorporation, okay, if after incorporation they ratify, then liable. Clear all of you? If after incorporation they ratify, then liable. So, for any contracts made before the incorporation of the LLP, it shall be binding and it shall create obligation on the LLP if it is ratified after incorporation. Correct? Which last point, Kaushik? So, any contract between the persons who subscribe their name shall impose obligations on the LLP if ratified by all the partners after incorporation. Now, moving on to the next one, cessation of partnership. Now, before I move forward, 2 minutes, if you have any doubt in whatever we have done, tell me. Tell me, any doubt or should we move forward? I get messages here delayed. I get your. It seems like no one is even. The chats are not lagging. Whenever there is a live streaming on YouTube, there is a minimum difference of 30 seconds in the streaming and in what you see. So what I have done 30-40 seconds before, you get it after 30-40 seconds. So the chat doesn't lag. That is how the YouTube sessions actually work. Now, what is cessation of partnership? It means termination. It means termination. I have, all thanks to you guys, I have seen such, what do you say, emojis or whatever you say, whatever you call them on the chat, which I've actually also. Yeah, so whenever it's a live session, no, there is a 46-second lag always, depending on the latency. So if it is higher latency, it will be more. If it is lower latency, I mean, so whatever. So depending on that, so it's always a gap of 30-40 seconds. It's not that your chat is lagging or anything. That is how YouTube. So cessation of partnership, that is termination of partnership. That is, you are no longer a partner of the firm. It can be by choice or by default. By choice means I on my own decide to leave the firm. I on my own decide to leave the firm. It can either be by agreement, or if there is no agreement, I can give a notice. Wherein partnership, there was no period of notice. Here, there is a period of 30 days of notice. If you want to leave the firm, you have to give at least a 30 days notice before you can leave the firm. On the other hand, by default, also partnership interest may be terminated. A partner is dead, LLP is dissolved, he is unsound, he is applied to the court to be declared unsound, to be declared insolvent. In all of these cases, by default, he automatically ceases to be a partner of the LLP. Now, when a partner is no longer a partner of the firm, a notice of the same should be given to the registrar. Otherwise, how will we know he is no longer a partner? So, if a notice is not given, that is, if we fail to give the notice, then he shall be deemed to be the partner of the firm. Right? He shall be deemed to be a partner of the firm. If no notice is given to the registrar, or the person with whom he is dealing has no notice of termination, he shall be deemed to be a partner of the firm. Correct? Now, when a partner leaves the firm, whatever was done while he was a partner, he will be liable. He will get his share of capital, and he will get his share of accumulated profits after deducting accumulated. But he cannot interfere with the business of the. So he is liable for the acts. He is liable for the acts of the LLP. He will receive. Oh my God, the spelling is wrong. It's receive. Okay. And if he is dead, obviously his legal heirs will receive capital contribution and accumulated profits after deducting accumulated losses, but he will have no rights to interfere in them. I hope it's clear to everyone. Now, registration of change in partners. If the name or address of any partner is changed, he should go and inform the LLP that my name or address has changed within 15 days of change. Why he should inform the LLP? So that the LLP can go and inform the registrar. Within 30 days, the LLP shall go and inform the registrar, which you will see is given here. Now, again for the LLP, if a partner leaves, okay, or joins, becomes, that is joins, ceases, that is leaves the LLP, the LLP must inform within 30 days, inform the registrar. You see, in the registrar's record, I have to make the changes, no? In the registrar's records, I have to make the changes, otherwise he'll be deemed to be partner. So we will have to inform the registrar. Kaushik, generally partner has limit, it's LLP, limited liability partnership. So we don't have personal liability unless and until we have done a fraud. Okay? Now, if partner feels that the LLP will not inform, can he himself go and inform the registrar? Yes, who is holding your hands? But LLP was supposed to inform, partner is informing. Maybe partner is trying to cheat the LLP. That could also be there. So in this case, the registrar will first confirm with the LLP. And if within 15 days they don't get any reply, right? If within 15 days LLP says don't make the change, registrar will not make. If the LLP does not reply, or they give reply but it is insufficient cause, they don't have a proper justification, then within 15 days the register will be changed, the registrar will make the change. Is it clear? This is amended if the LLP, that is if the this is what am I talking about here, this is if the LLP fails to inform the registrar. 10,000. If the partner, ma'am, what will be the default of the partner? The partner has to inform the LLP, no? The partner has to inform the LLP. If he fails to inform, again 10, penalty is the same, 10,000. Okay? If fraud, did you understand everything? Any doubt you have? Yes, today you people seem more exhausted than yesterday. They just like, oh my God, I'm done. I'm so done. Now, in case of fraud, if there is any fraud, okay, in case of fraud, if the LLP is doing any act is done by the LLP or the partner to defraud the creditors or to defraud any other person or in a fraudulent manner, obviously the liability will be unlimited. But if LLP proves it was done without my authority, LLP is not liable. But LLP, so this is only for LLP, not liable if proves that the act was done without its authority. Yes. So if knowingly you have done anything wrong, 5 years, 50 to 5 lakhs. So when I have written extend to 5 years, that means it's imprisonment because yours means imprisonment. Fine, when I write 50 to 5, that is minimum 50,000 can extend up to 5 lakhs, right? So, and they are liable to compensate that person. They are liable also to compensate the, is it clear? Is it clear? The problem is that the rest of the documents are not here, okay? The rest of the documents, so three topics are left, which is not here. Just give me a minute. I'll just find out those documents and open and just go through that. We're about to finish. We're about to finish. Okay. Question? Heard that word. Never heard that word. Chalo. Now moving on to the next part, whistleblowing. I was a part of the wrong act. Later, change of heart. And when change of heart, I want to go and speak out against the others. So if I am providing useful information during the investigation, or because of the information that I have provided, the court is able to punish the LLP or the partners or the employees, right? Then court will reduce or waive. Reduce means less, and waive means completely give up my punishment. I am a part of the crime, but change of heart. Now I want to become a good person. And I go and tell the court, see, my partners have done all these things, or I have given them information which helps them to convict the LLP or partners or employees. Then my punishment will be reduced or. Is it clear? Yes. Now, the books of accounts. LLP shall maintain proper books of accounts. These books of accounts shall be maintained on cash or accrual basis, shall be kept at the registered office, and shall be on double entry system, and shall be audited from time to time. Right? On double entry system, registered office, audited from time to time. Statement of solvency. Within 6 months from the end of the financial year, the LLP must prepare statement of solvency, shall be signed by the designated partners and filed with the registrar. Within 60 days from the end of the financial year, they have to file annual returns with the registrar. Right? There are a little bit of amendments here. So, what they are saying is that we have to file these. This is not for annual return. This is for statement of solvency and the books of accounts. We have to file it with the registrar. If the LLP makes any default in filing with the registrar, okay, the LLP and its designated partners liable to a penalty of 100 for every day, subject to a maximum of 1 lakh. And for the LLP, and subject to a maximum of 50,000 for designated partners. For all the other provisions, that is preparing the books of accounts, filing it with the the manner of filing, auditing of the books of accounts, all of that, okay, if failure to do that, then in that case punishable with, the LLP shall be punishable with 25,000 rupees, but which may extend to 5 lakh, and designated partner shall be punishable with fine not less than 10,000, extend up to 1. Right? Annual return, if you fail to prepare and file an annual return with the registrar, the LLP and designated partner shall be liable to a penalty of 100 for every day during which the failure continues, subject to a maximum of 1 lakh for the LLP and 50,000 for the designated partner. Is it clear? Last, winding up. The winding up of LLP can be done either by the LLP on its own choice, on its own voluntarily, or it can be done by the tribunal. Now, when will the tribunal order for the winding up of the LLP? 6 cases are there. First, when the LLP decides to be wound up by the tribunal. When the LLP decides to be wound up by the tribunal, they can go to the tribunal and say that please pass an order for our winding up. LLP continues its business for more than 6 months with less than 2 partners. LLP acts against the sovereignty and integrity of the country, does something which is against the interest of the country or the state. Or you have to file these documents. Remember, books of accounts, you have to file it with the registrar. For 5 consecutive years, they don't file it. 5 consecutive years, they don't file it. Right? Then the LLP will be wound up. You're not paying your debts. You're not paying your debts, limited liability, you're taking more loans, gone. Tab to khatam, everyone will sit and cry. You will laugh and everyone will cry. I will dissolve. And I've told you always, one open-ended point is always there. Apart from all this, any case where the tribunal feels necessary that the LLP should be wound up, the LLP would be wound up. So, the LLP decides to be wound up by the tribunal, right? The LLP decides to be wound up by the tribunal. Number of partners is reduced below 2 for more than 6 months. LLP is unable to pay its debts. LLP has acted against the interest of the sovereignty and integrity of India and the security of the state or public, or made a default in filing the statement of account and solvency for 5 consecutive financial years. I told you this, right? Or any just and equitable ground. With this, we are done with LLP. We are also done with. Have any doubts, you ask me. Otherwise, we'll. I'll miss you too, Nick. I'll miss you all. I'll also miss you all. Nah, I'll be seeing you all very soon as see, right? So much done. I'll be uploading these revision notes. I'll be uploading scanners also, them, and oh, I'll also miss you all. But I'll see you all soon. Right? We'll be in touch. You'll be telling me how your studies are going on. Scanners will be uploaded. Kindly go through them, and I will see you all very, 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 very. Okay. Thank you so much, Reshma. Thank you. Thank you so much, Kaushik. I did not get you, as in, oh, yes, Kaushik, thank you so much for such beautiful, kind words. Like you've written so beautifully. Yes, yes, it will be done. By tomorrow, I'll do it. Scanners today, by tomorrow, I'll do the scanners and everything. Okay. So, bye. Don't waste your time. Every moment is crucial right now. Whenever you feel any help from us, just drop a message. If not immediately, we will definitely reply whenever we are free. Need extra dose of motivation at any point of time, just drop a message. All the best. Just remember you just remember one thing, what am I saying? Whenever you feel anything, okay, just remember one thing: you guys rock and you are amazing. Okay, just remember this. Nothing else. Just remember this. You guys rock. You are amazing. Okay. Bye bye. Take care. And now I'm ending the session. So take care, all of you. And most importantly, yes, one thing. Just because exams are approaching, sleepless nights, not sleeping, only studying, not eating food because you're scared, don't do all that. Don't do all that. Okay? Bye, bye, bye. Don't do all that. You need your sleep, you need your food very, very, very importantly. Right? Chalo, bye.